All right. Hello, everybody, to the official NVIDIA Q2 2024 stream. If you are watching on Jose's channel, we are streaming it live together. So this stream is starting on his channel as well. And if you don't know me, my name is Mitt. Jose joins my channel many times throughout the month and gives us the update around semis. He'll be here in a little bit. But we're going to get started. And we are going to discuss for the next 30 minutes what is happening in the world of NVIDIA, what has happened in the markets today. Been a very volatile day in the broader equity markets. And as a result of that, we're going to be talking about what that means for NVIDIA earnings and expectations, which will happen in the next 30 minutes. I think it's like 35 minutes because it comes out at 4:05. So there's a lot to discuss. There's a lot to go through. And there's a lot to talk about. Thank you, everybody, for being here. Hopefully, you guys are having a good day. This is important. This is one of those days before we get started that I think is important to remember. This is what you sign up for if you decide to invest in the global capital equity markets. You are someone who has chosen to take a risk. You're someone who is not just leaving their money in a bank, even though most banks you get 0.01%, but in a money market fund, you're getting a little bit more than that. But in general, you're someone who's ready to take on more risk, someone who's ready to compound their money, someone who's ready to understand what is happening in the world from the macro, from the technological revolution that is AI, and you're willing to take a chance. And I think that already 99% of people do not invest, not only in America, but across the world. So the fact that you have any money in the stock market and you actually care about what's happening today, I think is very important. Even if you don't own NVIDIA, NVIDIA obviously determines the direction of the market, and that is well documented based on the past couple of earnings and what has happened over the past year. So regardless of what you own, it likely is going to be affected by what happens with NVIDIA today. All right. So shout out to Jose's channel. I don't know where he is. He must be just running a little late, but he'll be here soon. And then we'll get started with our coverage both together. So let's start off with the first two things that have happened today. Number one, there he is. He joined right there. Jose, this is your day, and you're 4 minutes late to your biggest stock.
I know. I was going to get on the chat and say, Jose, you're late.
You were going to pull a myth today. So I love it. Okay, so we have a lot to talk about. Jose, let me just do a quick little overview of what's going on in the market, and then I want to start getting your thoughts on everything we're seeing. So
sounds perfect.
Equity markets are, I don't want to say crashing, but they're definitely taking a little bit of a hiccup right now. So if we take a look at this, NVIDIA down about 1.6%, CleanSpark down 6.7%, Robinhood down 5% on the day, Palantir hit below $29 or $30 at one point, and it was at 29, I think 29.90 on the lows, or 29.75 on the lows. Foot Locker is down 10%, Nike is down 3%, Ulta Beauty down about 0.47%. Berkshire Hathaway is hitting all-time highs. Berkshire Hathaway today at $1 trillion of market cap. So markets obviously picking value over growth today. And then on the opposite side, you got the S&P 500 that's down a cool 0.5%. At one point, it was down 1%. So it bottomed at 555. If you got that dip, not too bad. But right here at 558. The big story of the day, obviously SMCI down 19%. I didn't even know it hit 395, but apparently hit 395 today. The reason for this, Hindenburg put out a short report on SMCI yesterday. I kind of read the report, thought it was nonsense, and then the day after, SMCI fails to put out their 10K. They delayed their 10K, and the whole point of the Hindenburg report was that it was accounting fraud. So it just doesn't look good. Now, why does this matter for NVIDIA? Well, one of their largest clients, or I think the largest client of SMCI, is NVIDIA. SMCI does a lot of the servicing and the cooling technology for the GPUs from NVIDIA. So not nice to see one of NVIDIA's biggest clients down, or SMCI's biggest client, NVIDIA, and SMCI seeing a 19% drawdown on today. But in general, I think the broader markets, and I'm sure Jose has been used to this, have a lot of volatility when NVIDIA reports earnings. And the reason for that is because the entire market is waiting on what's going to happen with NVIDIA. So buying or selling anything, quite frankly, is just kind of on pause until we get the actual NVIDIA numbers. But I think that was kind of the main story of the day, with SMCI being down. Maybe NVIDIA lifts it up, maybe not. Jose, we have a lot more to talk about. I have some whisper numbers from JP Morgan that I want to get your perspectives on as well. But in general, you've owned the stock for about 6-7 years now. You have a big position in the company. You've been covering the company. Your entire YouTube channel is based on covering semiconductors and NVIDIA. What are your raw emotions going into this earnings today?
I'm actually pretty calm. You know, I enjoy seeing the craziness happening right now in the market. I think everybody's worried about what we're going to hear about delays, maybe the Chinese market, if they're going to beat expectations. So I think we're just going to continue to see volatility here in NVIDIA stock. But to me, I'm pretty calm. From what we've heard, right? We've heard a lot, and a lot of companies already report earnings. We've heard big tech players say they're going to increase capex. We've heard companies like AMD mention that there's still a strong appetite of AI solutions, and this is not stopping anytime soon. We've heard from companies like ServiceNow that they are seeing revenue in the AI market. We've heard from Palantir that there's a nice appetite here in the AI space. So, I mean, if NVIDIA was the first to report, maybe I would be nervous, but since it's one of the later companies and we've kind of gotten all those green flags or confirmations, it makes me a little bit less nervous. Again, and this past week, I'm not sure if you're familiar, there is this big semiconductor conference happening, or it happened on Sunday, Monday, and Tuesday, and it's called Hot Chips. And this is more of a technical side. It's not too much for investors. If you're an investor, I don't think it's necessarily something you need to watch. But I enjoy the technical aspect and the technology innovation. And yes, Monday, OpenAI actually had a keynote during there, and they mentioned that, hey, look, computational power is still needed, and it's growing at massive levels to train the next frontier model. And it's growing at you need 4 to 5 times more compute each year. And we're still in early innings. So again, all the checks show me that, hey, look, we're going in the right direction. And NVIDIA at the moment doesn't really have much competition to say for me to worry about them.
Speaking of OpenAI, and that's a really good point, because again, and we'll get into kind of what the use case of NVIDIA ultimately is for people to understand the importance of it. But OpenAI, ChatGPT, the only reason NVIDIA is where it is because ChatGPT went mainstream. ChatGPT basically allowing people to interact with information on the internet through a large language model trained on a GPU, which has been a fundamentally different way to engage with the internet. OpenAI from Wall Street Journal in talks for a funding round valuing the company above $100 billion. Recent revenue was $3.4 billion, and their last funding round valued the company at $86 billion. So they're in talks to raise at a $14 billion premium to what they were currently raised at. Microsoft and VC firm Thrive Capital, I think that's Jared Kushner's firm, are expected to invest billions of dollars in this round. And the information reported a couple of weeks ago that they lost $5 billion, even though they did revenue of $3.4 billion. So not profitable yet. But what is your take on that? The fact that they're getting valued at $100 billion, does that give you a little bit of a proxy for where NVIDIA is going as well?
Not sure. I mean, OpenAI is definitely a tricky one. It's definitely filled with a lot of drama, and I'm happy the company is not public, because if I was, I think this would be a stock that would be highly volatile, with leaders always fighting and engineers being poached left and right. So it's a company that, with the current market trends that we're seeing, with the current market beliefs and technology beliefs, that AI is the future. And I do believe AI is the future, right? I think artificial intelligence is going to be very important for various things, from consumer products to healthcare markets to national defense markets. The question is, how quickly can we get those products? And I think that sometimes that's the biggest thing, where we might be right with technology, but we're just not right with the timing. And I think with OpenAI, that's going to be one of the worries. Hey, is competition here? Are you trying to do, are you moving too quickly? Is the market even ready for your product? So, I mean, them value at $100 billion, definitely a huge company. But it definitely tells you that, hey, look, there's plenty of money for the AI space right now.
Yeah, and I think that's the thing. There is plenty of money for the AI space. People can debate about valuations, but if people think this is the next leg of growth for humanity, and again, like, we're all investors here. Growth is what drives the world forward. If you don't have a narrative of growth, and then hopefully the numbers to support that growth, which NVIDIA might put up today, then the world is stagnant, GDP is stagnant, and you just don't move forward. And so investors are chasing a yield. They're chasing capital at the highest of levels. They believe this could be the next coming of the internet. And that is why NVIDIA is getting the momentum that it is getting all year. And that's why OpenAI potentially is being valued at $100 billion. Now, we also have some news. This came out this morning. JP Morgan on their trading desk. We got Dan Ives on CNBC. Okay, so before I say my numbers, let's get Dan Ives' perspective. Let's get him up real quick. Let's actually listen to that. That's his, I mean, this guy has been taunting NVIDIA for a long time. So let's hear his final perspective. And then we'll keep going from.
And if after we can hit a quick segment on that super micro.
Here is Mr. Ives on NVIDIA, and then I'll get you guys some of the street whisper numbers that are out for NVIDIA.
Stock market this year. He's Dan Ives of Wedbush, joining us here at Post 9. I don't think many would agree. I mean, it's obviously important. The most important thing you're watching for is what?
It's really about what Jensen, godfather of AI, talks about in terms of demand, because there's no better perch in terms of from an AI chip perspective than from what NVIDIA sees. So I think it's not just about October quarter, it's really going into the next, call it 6 months. But I mean, we've talked about everything we're seeing from an Asia supply chain perspective. I think it's a drop to mic performance tonight.
What about the possible Blackwell delays and getting more clarity on exactly what that is? Because when you say, well, you'll hear from him on demand, we already know demand's great, yep. Right? We already know that. We heard from the hyperscalers. We know that revenues on CapEx are up 40, 50 times, 50%, I mean, over the period of a year. What about Blackwell?
Well, I mean, I don't view that, even if we're talking about 2-3 months, anything that moves out of the actual October quarter. When we look at from a CapEx perspective, when you look at Blackwell, if you could guide up, call it $1 to $2 billion with a delay, in terms of where the trajectory here, I mean, you're going to start looking at what ultimately will be $5, $6 earnings power for NVIDIA when you look out year. And I think the most important thing is here, you have the pieces of the puzzle, this Rubik's Cube. You have the CapEx players that we've seen from big tech. You have names like Palantir, ServiceNow, and others. But as the godfather of AI speaks tonight, this is the final piece that shows that this AI party we've talked about, it's 9 p.m. and it goes to 4 a.m.
Okay, speaking of, hang on just a second. Speaking of AI, Kate Rooney has some news for us regarding OpenAI. Kate?
Hey, Scott. So a source telling me that OpenAI is raising another round of funding. This is going to be led by Thrive Capital. It puts the AI startup's valuation at roughly $100 billion. According to this source, OpenAI and Thrive did decline to comment, but a source close to the matter telling me that Thrive is going to be putting in $1 billion. The Wall Street Journal first reporting this and also has some other details here saying that Microsoft is also expected to put in some additional funding. And this would be the biggest round, Scott, since OpenAI and Microsoft and that deal back in January 2023. Microsoft invested around $10 billion. Of course, there's been this arms race in Silicon Valley in terms of spending. This is expensive to run one of these large language models. They really are building a war chest here. So $100 billion is just a massive number, puts it near the likes of Stripe, SpaceX, some of the most highly valued Silicon Valley companies out there, Scott. But the latest in the AI arms race. Back over to you.
Yeah, Kate Rooney, appreciate that. Have timely report, obviously, having Dan Ives sitting next to me. You want to comment on this?
I mean, we have $1 trillion of CapEx, of AI that's coming down the road. You look how OpenAI's position, that's the golden child in terms of where I view AI. And I think this is just the start. We talk about valuations that continue to increase. It's a scarcity value, no different than NVIDIA. What you see on the private side, when it comes to OpenAI, Nadella and Redmond continue to sort of win that race.
So,
okay, we'll finish up Dan Ives' thoughts in a second. Let's get into these numbers by JP Morgan on what they think is going on with NVIDIA, and then I'll get your reaction to that. Basic thing that Dan Ives said, though, is it's about guidance, and obviously the guidance is going to determine everything. So let's get your reaction to this, Jose, given you've been following the company for a long time. Whisper numbers are not official numbers. They're unofficial earnings expectations for a company, but circulated among analysts. NVIDIA is most prone to these whisper numbers because NVIDIA usually crushes every earnings, but over the past couple of quarters, the analysts have become more aware that NVIDIA is sandbagging a little bit more than what they think. Therefore, last quarter, everyone knew they would do 26, but they said they're going to do 24. Then they did 26. So the analysts kind of thought they would do 26. And that's kind of how it plays out. JP Morgan says, hey, we think they're going to do $29.8 billion in revenue versus 28.6 expected. Gross margins will be up 1.2% at 76.2 versus 75%. EPS would beat by 5 cents at 69 cents versus 64 cents. On guidance, JP Morgan thinks they're going to do $32.9 billion, call it $33 billion versus 31.4 expected. And then fiscal year 2025 and fiscal year 2026, JP Morgan thinks they're going to do 125 and 186 billion versus expectations of 120 versus 166 billion. Jose, do you think these numbers are realistic?
Yeah, for sure. I definitely thought on my end, I think revenue and guidance revenue for quarter three. We're at least going to be a $1 billion beat. So this is what we're seeing here with Whispers. The one that really caught my attention, if I may be honest, was gross margins. So here we see 76.2%, which the Whispers, again, not official numbers, but I was expected a little bit lower, maybe closer to a 75 expectation. The reason being is, right, when you have new products coming out, the ramping process of manufacturing a new product kind of hurts margins a little bit. Also, the company has mentioned that while margins might have peaked last quarter due to some benefits that they had in cost of products. So in previous commentary from management, they mentioned that we kind of peaked a little bit in margins. So kind of seeing them a little bit higher than expected. I think that would be very, very bullish if we see those numbers.
How crazy would a $33 billion guide? I think the street would eat that up.
I mean, I think so too. The appetite for AI is so strong right now. I mean, just a year ago, we were building GPU clusters of 16,000, right? That's what Meta has. They have 16,000 GPU clusters. This quarter and the last quarter, we've heard xAI building a 100,000 cluster GPUs. And xAI is not even the top AI company, right? All these other players probably have a lot more money. A lot of these big tech players are also going to be building those 100,000 GPU clusters. Tesla just showcased their 50,000 H100 GPU cluster. I mean, with the Blackwell and Jensen mentioning that in the future we'll get to 1 million GPU clusters, I don't see why NVIDIA doesn't continue to give us a nice rise in guidance. Obviously, though, the biggest bottleneck is going to be supply capacity, and that has to do with advanced packaging from TSMC. So that's going to be, that right now is the real stoppage of revenue. And if we see any miss in guidance, I think it's most likely due to just supply capacity and not the demand that we're seeing from big tech players.
Interesting. So your argument here is that if they miss in guidance, which would be really bad for the stock and really bad for the market, the underlining reason, which is the same thing that happened to TSM 2 quarters ago, was that they have too much demand and not enough supply, which is a good problem at the end of the day.
Yeah, definitely. I think, and again, right, these earnings, I'm not going to say that if the stock drops, it's an automatic, I'm going to see this as a buying opportunity. I have my checks that I'm going to be looking at. Hey, is this good? Is this good? Is this good? If the reason the stock drops today is because they miss on guidance, but if they miss on guidance because we've heard that maybe there are some issues with the supply chain line, I don't think that's necessarily a big bearish case for me. It's definitely a hurdle, and I would understand why the stock price would drop, but for me, it would be more of a buying opportunity. So I would have to check my list that I have up here and say, hey, look, is this okay or not okay? And then go on from there.
Okay, let's talk about SMCI. So I know a lot of people are wondering what the heck's going on with this. Down 17% on the day. At one point, it was down 25%. So again, they failed to file their 10K. They delayed that. That's why it's down 20%. The argument here is maybe there's some accounting problems inside of that 10K. And given the short report that came out yesterday from Hindenburg Research, maybe that's reaffirming the argument that Hindenburg made around this company really just not having their shit together, quite frankly. Jose, you know SMCI really well. What is your take? Why do you think the market is punishing them so badly?
I mean, the biggest thing is Supermicro has had this happen before. In 2020, I believe they were accused. I honestly don't know the final results, if it was determined that they did or if it was just accused. Like, I'm not going to give false information here, but I know we've seen this story for Supermicro before in 2020. So, I mean, market is going, hey, look, if you've done this before, why would it not be impossible for you to do it again, especially since now you're delaying the 10K reports, right? So, I mean, it just informs of perception. It doesn't look good for Supermicro. Now, in terms of what they're doing, it might be like they are just moving some of the orders that they were going to push out maybe next quarter into this quarter to pump up revenue. But I still believe the demand for Supermicro is there. So I don't think they're pumping numbers in forms of sales not really being there. I think they might be pumping numbers on when the sales happen. And that's a whole different story. But I think it's not, I don't think it should be seen as a demand issue for the AI market. It's just something weird happening here with Supermicro. So I think the stock, if they come out in a week from now, though, saying that, hey, look, we reviewed our 10K report, everything looks fine, then I think the stock is going to go flying.
Yeah, I agree. I think the reason SMCI is down right now, it's very important to understand it's not because of demand or any other sort of fundamental issues with the company. It's because they delayed their 10K filing, which unfortunately is gross incompetence by management. It's not, it's not like there's a fundamental problem in the AI thesis from SMCI's perspective, which is sad. But again, it's kind of the volatility we see on NVIDIA earnings in general. Every single NVIDIA earnings, whether it was February or March of this year, or February or May, the market was down. And so far, if you sold on those days, it ended up not being the best decision because NVIDIA crushes, the market goes crazy. The only difference is NVIDIA is kind of controlling the entire market right now, and NVIDIA is up 166% year to date. So NVIDIA was not up as much as it's up right now before the last two earnings. And so the market had more momentum and room to give it multiple expansion, although the growth has gone higher, and technically buying NVIDIA right now on a PE basis is cheaper than buying it right when ChatGPT came out in March of 2023. It has run a lot. And I think that's going to be the question of if the market has more room to give it some juice, which is, I guess, the next question here, Jose. Even if they crush like guidance, gross margins, all that stuff, do you kind of think the buyers are just tired when it comes to NVIDIA?
The only thing, I don't know if the buyers are tired. And unfortunately, I think for every quarter from here on out, it's going to be this. This is going to be the most important day of the year. And we're going to have this day 4 times a year. So I think NVIDIA, unfortunately, has the whole market on its site. I think with the recent downfall that we had on August, there might be some people that, hey, look, what if that might be worried that we might get something like that. So I think right now we might have some weak bag holders or weak hands that if the stock goes up, they're going to be like, oh, look, let me sell out before we kind of experience that one price drop to 100. So again, that short-term noise is, as a long-term investor, not worried, but I can definitely see why there might be some investors that are just looking here for a quick buck. And I think those, if we do see a nice price up, they're going to try to sell out because they are worried that we might get some negative press in the next few weeks or so.
I would tend to agree. All right. On Twitter, I had my NVIDIA pump or dump poll. We had 2,570 votes. 62% said pump. 37% said dump. I'm going to close the current YouTube poll at 4 p.m. We have 1,400 votes. So if you haven't voted on my channel, go ahead and vote. 78% say pump. 22% say dump. This is definitely one of those situations where I think the far majority of people are bullish on NVIDIA. There's obviously a lot of bears, but I think there's a lot more bulls. And technically, if you want to be contrarian, you would be a bit bearish here. But I also think this is a unique company with a unique type of demand cycle that's just different from a lot of their companies on the planet. And as a result, hopefully their numbers will live up to the results that people are expecting. We got earnings in 6 minutes, folks. I think it comes. Jose, does it come out at 4:05 in your experience?
From what I remember, I don't know if I'm thinking AMD. I think it might be 4:15, but 4:05 might also be it.
Okay, so the heart palpitations can now begin, and we can all get super excited because we are getting close to it. We do have Salesforce and CrowdStrike after the bell, so if we don't get NVIDIA till 4:15, we'll cover Salesforce and CrowdStrike and see what ends up happening there. Now, kind of one other big thought I had on NVIDIA was about that call itself. So last time the stock pumped after the call, and the call was, after the numbers, and the numbers were good. The numbers were exceptional. But the call is what calmed people down. And one of the things that Jensen said that calmed people down was the idea that you're going to see Blackwell revenue, and Blackwell revenue is going to start to form. I have a point to make here, but Jose, real quick, what are your thoughts on the Blackwell delay stuff? Do you think it actually matters here?
I don't think it matters as long as it's fixed. And if it was only like a 2-month delay at most, if it's longer, then yes. And it doesn't matter as much if we hear that, hey, look, H200 is being eaten up by demand right now. So those would be the two main issues, because it's important to understand, right, that building these H200 and the Blackwell, you kind of need that advanced packaging capacity. So if you're not using it to build the Blackwell series, you're going to be using that remaining capacity to build the H100 and the H200. So it's not like you really lose out in revenue because you're still, at the end of the day, capacity constraint in forms of advanced packaging. So as long as we continue to see that appetite on the H200, I don't think it really matters. But I'm from what I'm hearing from my checks, I don't think we're going to hear too much about too much pain from the Blackwell.
Yeah, I think that's fair. And I think because the chip demand is so high, people are still going to settle for the H100 or H200, which are generations below Blackwell. But people need these chips. These chips are very important, and it looks like that demand is not going to be affected for Q2 or Q3 guidance. Now, in terms of the call itself, here's my personal perspective. I think the market is freaking out when it comes to the hyperscalers. Q2 earnings was good for large cap tech, but it wasn't amazing. And the reason for that is because although they all crushed their numbers, they spent 14 to 15 billions each over the past 90 days on CapEx, which includes infrastructure, buildings, but a lot of it ultimately being GPUs, data centers, the stuff that fuels NVIDIA's top line revenue. So we saw Meta take a little bit of a dip. We saw Amazon go down to 150. Microsoft fell 10% on that day. I think Jensen Huang on this call needs to explicitly say people need to chill out in an intellectual way, or not intellectual, just say, hey, chill out and calm down the market from thinking that every time they see a large CapEx spend, but they don't see an AI or they don't see an ROI or monetization from that CapEx spend, that the stock is too expensive or that they need to sell it off. I really think if you're buying the Mag 7, if you're buying tech, you believe in AI. And if you don't believe in AI and you're buying tech, I don't even know why you're buying tech. So the market to me is being incredibly emotional. They need to give these companies time to build out their next decade of growth, which is the infrastructure, aka the GPUs that are necessary to get that growth. And maybe Jensen Huang on this call can calm them down just by reassuring them via numbers, statistics, empirics, anecdotes, whatever he needs to do, that things are going to be okay and AI is a real thing. What is your take on that, Jose? Do you think he needs to remind the market that AI is real?
Yeah, I mean, I think Jensen, if you're gonna, in prior earnings, he kind of does that a little bit already. He kind of talks about some of the companies that are benefiting from AI, and I think he's going to continue to do that this earnings, and it's going to be more looked on, like you mentioned, as everybody's wondering, hey, what is happening with these AI chips, and is there actually some great ROI? So I agree. I think Jensen, he always does, but he might go a little bit more with it today. And Jensen, he's a great speaker. He's one of those CEOs that has a very interesting mind, definitely very revolutionary mind in where he sees technology. And I don't just say that because of AI right now. In the past 3 to 4 years, me listening to hear him talk, it always kind of he always sees the kind of technology that we're getting. He might be wrong sometimes, he might be right, but he definitely has a nice visionary outlook. And I think that's great when running a company like NVIDIA that's focusing on changing the way technology is made.
I would agree. And now it's time to see what he's going to put up. So this is actually not the jittery moment yet because it comes out at 420, apparently you guys are saying. So we'll see some movement in the stock, but we won't actually see the numbers. We'll probably cover Salesforce and CrowdStrike. So in about 20 minutes, we'll see what happens. Thank you everyone for being here on the stream. Really, really appreciate it. You guys could spend your time in a lot of places, but you're here with me and Jose with us for NVIDIA earnings. So thank you everybody for being here. And now we got a market to close and see how this is going to end up playing out. What's going to happen? NVIDIA down about 2% into the close. So we got a sell off right here. We got all these weak hands getting rid of their shares right before these numbers.
They're not watching the stream. That's why.
They're not watching the stream, baby. Here we go. Thank you, everybody, for being here at 4 p.m. It's NVIDIA earnings day. The stock market is now closed. And now we wait. Now we wait. Now we freaking wait. Oh boy. Now we wait. So we got NVIDIA right here, slightly up right now. Again, it's going to be about 10-15 minutes until we see the numbers. If anyone gets it immediately, just put it in the chat. Please don't troll in the chat. Please don't troll. Don't say they did 40 billion in revenue or something. Because I believed it last time for Palantir. And so Palantir did 750 million and I was wrong. So don't say that.
CrowdStrike is definitely going to be an interesting one today. I mean, I like your theory of it doing it today when NVIDIA's reporting, so it doesn't have to, so it can kind of hide behind the big monster.
Oh, I think that's the smartest thing they did. I think they know they're going to have a little bit of crappy guidance. I don't think the stock's going to go down too crazy. I think it already took a lot of pain, but no one cares about CrowdStrike as much as NVIDIA. But for 20 minutes, I guess people will kind of care about CrowdStrike. CRM is up 1.9%. I think they usually have numbers immediately come out. So let me see if I can get those numbers, guys. And then we will have to wait about 20 minutes for NVIDIA. Up, it just went red. Now we are down 2% on CRM. CRM fell, I think, 20% last earnings. It was one of the highest drops they've had in like 10 years. I think the problem with CRM is there's not an AI narrative, even though there is, decent growth at 9%, 11%. But the market right now for SaaS is wondering what happens with AI. Salesforce is out. Expected numbers 236 on EPS. They beat by 20 cents at 256. Revenue was expected 9.23 billion. They beat by 9.32 billion. So you have a decent beat on EPS, a slight beat on revenue. The stock is up 3%. There you go. 3% on Salesforce. Not bad at all. Congrats if you have Salesforce. Let me know in the chat if anyone has Salesforce. Jose, any quick take on like an AI narrative to Salesforce, or kind of just the basic SaaS company?
Here, not really. I mean, I know they are obviously CRM, customer relation management. You can definitely benefit with AI. I don't really know too much about Salesforce actual products, but I do want to say AI can probably reduce the moat if they don't accelerate fast in growing their AI solutions, right? I think that's a market that can definitely be hit with the evolution of AI. So Salesforce needs to be careful.
Yeah, I would agree. And the reason they got hit last time is because the market just really had no idea why they were investing in Salesforce. A lot of the argument is SaaS is going to get commoditized by AI. I think that's a little overblown, but you just got to give a good narrative, and you give a good narrative, stock usually tends to get rewarded. NVIDIA right now, we are still waiting, folks. It's a little bit green after hours, but we have about 10, 15 minutes left until NVIDIA numbers come out. CrowdStrike, I don't think this is really an earnings move yet, but it's slightly up after hours. We should be getting numbers soon for them. Salesforce up a nice 4%. I'm just happy Salesforce is not down. Salesforce is a big company. It's a top 10 holding in the Dow Jones Index. You don't want to see Salesforce take a 20% decline. So Salesforce being up is not too bad. Okta had earnings today. Oh, wow. Okta's down 4%. Okta, another SaaS company. Let me see if I can get those numbers right now as well. Yep, they are out. Revenue, 646 million versus 632. They beat by about 14 million. EPS, 72 cents versus 61 cents. Let me know if you own Okta in the chat. Okta is down 5%. $16 billion market cap, price of sales of 6, PE of 65. But they did beat on their top line numbers as well. All right, so we got a Salesforce beat and we have a Okta beat right here. Now we're just waiting for CrowdStrike and NVIDIA. Let's get a little bit of analysis on what's going to happen on NVIDIA as well from Josh Brown, get his take, and then we'll keep going from there. Numbers should be out in about 15 minutes.
What do people need to know here?
I think the most interesting thing here is that despite the fact that this market cap has grown to the size that it has, the volatility is still with us. That's usually not the case. Usually as companies become larger, we expect a maturation in their business. And as a result, we're less jumpy about the stock price from day to day. NVIDIA is just a different thing entirely. It's its own self-contained casino in the stock and options market. And this report is no different. NVIDIA is expected to move plus or minus 11% in reaction to the earnings tonight. For the last 8 quarters, the average implied move post-earnings was plus or minus 12%. So the game is still the game. That's the first thing I would tell you. The second thing, expected earnings per share of 65 cents, just to set the table. That's 138% year-over-year gain on revenue of 28.7 billion, which is a 113% gain. If you look at the last reactions to earnings from 2023 through today, reactions were plus 14%, plus 24%. Then we had a flat. Then we had a minus 2%, which is inconceivable, but it happened. Then we had a plus 16, and then we had a 0. So really, the average reaction through last quarter, throughout 2023 and 24, is plus 10%. But as I've shown you, those results have really been sort of all over the map. We haven't had the big down reaction. That's the one thing we haven't seen yet since the NVIDIA era began. I'm not suggesting tonight will be this.
Crowd is out. Let's see what we got on the strikes of the crowd. EPS, $1.04 versus 97 cents. That's a beat.
Nice, nice.
CrowdStrike right here up 2.5%. Revenue, 963 million versus 958 million. That is a beat. There you go. CrowdStrike. Look at that. Look at that thick green candle up 4% right now. Not bad. Jose, any quick take on those top lines?
I mean, that's just the thing about sentiment, right? It's probably a lot of people were expecting this to kind of do bad due to the error, an issue that came out with CrowdStrike earlier. And any beat would obviously do well. Obviously, we'll hear more about it during the earnings call, and management will probably tell us a little bit more, maybe of some lawsuits or some other pain. But at least for now, things to look pretty good for CrowdStrike.
All right, so here's the actual numbers right here. So CrowdStrike, 32% year-over-year growth. Again, just incredible for a software company. $3.86 billion. GAAP net income, 500% increase. Net income or non-GAAP net income, 45% increase. Record Q2 operating cash flow of $327 million. Record Q2 free cash flow of $272 million for CrowdStrike. Let me know in the chat if you own CrowdStrike as well. Here's what George Kurtz said. Working with customers to recover from the July 19th incident, so that's the first thing he says on this press release, so they're attacking it head on. We emerge as an even more resilient and even more customer-obsessed CrowdStrike. I love this first sentence. He says, you know what? You tried to take me down. We're going to spin this and make it a positive. Continuing to aggressively invest in innovation, our second quarter demonstrates the resilience of our business and platform with log-scale next-generation SIEM, identity protection, and cloud security eclipsing $1 billion in combined ending ARR. In response to rising point security complexity and an elevated threat environment, organizations are increasingly focused on consolidating their cybersecurity vendors into a streamlined platform. We saw Palo Alto talk about this whole platformization approach to cybersecurity that delivers better security outcomes, which is CrowdStrike Falcon. Our vision and mission of stopping breaches remains unchanged. Okay, so I care about their guidance now. Maybe they do that on the call. I don't know if they do that. Yeah, they're going to do it on the call. It looks like, well, Q3, they're guiding for $984 million. That looks really good to me, Jose. I don't think that's that bad. They said CrowdStrike's revenue guidance for fiscal year 2025 includes an estimated 30 million subscription revenue impact. That's it? 30 million? That's it? 30 million? All of this hoopla for 30 million? Oh, but CrowdStrike should be up right now. Yep, CrowdStrike's up too. That, I mean, if you're a CrowdStrike investor, that has to be music to your ears. That has to be music to your ears right now.
I mean, I think you mentioned it before, how management and just the tone of management is very important when investing in a company. And CrowdStrike, I don't know if it was their CEO or their CFO, in the recent hackathon, they accepted, unfortunately, it was like the worst award of the year during this hackathon. And it's supposed to, I forget what's the name of the award, but the CEO or the CFO or the CTO went up to it and it's like, thank you for the award. This is an eye opener for us, right? I'm gonna place it so all the engineers can see it and make sure that we will never get this award again. So hearing something like that from management, where they understand what they did wrong and making sure that they're never gonna make a mistake like that, it kind of just showcases the type of management that I would like to invest in.
Yeah, I agree. This is pretty, and I don't have a huge position in this company, so like I have like 5 shares. It's not like it affects me if it goes all the way up or all the way down. It's not that big of a deal. But the point is, I 2 months ago, or not 2 months ago, 2 weeks ago, I was expecting a harder guidance hit, and then last week, after reading a lot of reports, I was like, you know what? It doesn't seem like it's going to be that big of a deal. And here you go. It doesn't look like it's that big of a deal. So we'll see.
That's a crazy candle right there, though.
That is a crazy candle. I mean, it went all the way to 277. Now it's back down. The stock could still drop, right? Like anything could happen. NVIDIA could, crash and then everything drops. But the point is, if 30 million is what everyone was afraid about, I don't know if that's going to be the worst thing in the world. But nonetheless, we'll see what happens when NVIDIA reports. Salesforce now is up 1.19%. It was up 4%. Now it's up 1.19%. So not that crazy. Affirm had earnings today. How did I not know that?
Did Reddit have earnings today? It seems like Reddit. I'm seeing in my chat that Reddit is down as well.
I will check. No, Reddit already had it a while ago. Reddit definitely didn't have it today. So, or I'll check to make sure. Affirm numbers, 14 cents loss on EPS. The street was expecting them to lose 44 cents. That's a beat. 659 million in revenue. The street expected 605 million. 659 minus 605 is 654. So they beat, or not 650, sorry, 54 million. So they beat by 54 million, which is a nice beat. Affirm is up 10% right here. You had a lot of people thinking buy now, pay later companies were just going to go down the drain given an upcoming recession. At least right now, it looks like buy now, pay later is just having more demand. So there you go. There you go. That's not too bad. Affirm right here is, wow, it's up 11%. 11% on Affirm. That is not bad at all. Now it's up almost 12%. Reddit, let me take a look at Reddit real quick.
No, I checked. I don't think anything was happening with Reddit.
Yeah, Reddit's flat.
Yeah.
Salesforce and CrowdStrike still defending their 2%. I mean, that's all you could ask for before NVIDIA earnings is a couple percentage points green. So Salesforce and CrowdStrike. And on CrowdStrike, again, we have to go deeper into the numbers. Even if it's 30 million a quarter, that's what, 120 million a year. That's still, dude, like if you told me the extent of Y2K was 100 million, I mean, I would take that any day, right? Like that just doesn't seem like the worst thing in the world.
And I think that's the great thing about CrowdStrike, right? CrowdStrike has so many modules that it's not just a one product company. So even if you hate it, it's probably going to suck for a company to say, hey, look, I'm already 10 modules deep into CrowdStrike. It's probably going to suck for me more if I go try to find some other company that can offer all these 9 modules that I'm already sucked into. So I think that's the great thing about being a company that has this huge toolbox, because it makes your business a lot more stickier. And that's might be what's happening here with CrowdStrike, where they might have some hate from their customers, but their customers at the end of the day don't want to go with the pain of finding someone else to kind of get all those other modules.
Yeah, seems like that's what you got going on right now, and that's why we're getting a little bit more momentum. Let's take a quick another look at CrowdStrike. And guys, we have NVIDIA in about 8 minutes. So in 8 minutes, we'll get to NVIDIA.
On that IT outage and how that's impacting these results. First, EPS, like I said, was $1.04. We are comparing that. It's a beat. 97 cents adjusted that the street was looking for. We are excluding from those estimates, though, the impact from the outage. As for revenue, that was also a beat, $964 million versus the $958.6 million expected. They're also saying, as far as the IT outage impact, 2-cent negative impact to EPS from the outage, and they're expecting a $30 million subscription revenue hit each quarter remaining in their fiscal year. That's 2 more quarters.
Okay, so that would be about 60 million would be the hit.
From that outage. So that's the basic thing that we got as far as the fallout and the financial impact from that IT outage there, John.
Okay.
All right, there you go. Affirm, CrowdStrike, and Salesforce putting up some decent numbers, and now 7 minutes left until NVIDIA. Affirm is just incredible. I would imagine they said something in their guidance. Now, the reason Affirm matters, guys, is because this whole talk about a recession, if we have a recession, Affirm is one of the first companies that's going to get hit, right? Because buy now, pay later. I mean, people are not going to be paying later if they're having massive delinquencies and defaults. So the fact that the street's giving them this love before the September 6th job report, which I think is going to be even more important than NVIDIA earnings, because NVIDIA earnings don't matter if we're pricing in a recession because we have too much unemployment. That's very bullish for the broader stock market. And it means investors are seeing something in the state of the consumer that is not that troubling versus some of the other companies that have said the consumer is struggling. So it's not bad for Affirm right now. It's 16% up. CrowdStrike here still up 2.76%, and Salesforce as well up 3.1%. I'll be closing the poll at 419. We have 4,600 votes. It's still 80-20 pump on NVIDIA versus dump. So we got 6 minutes left until we see these numbers. Jose, what numbers would shock you on NVIDIA to the upside or the downside? Guidance, gross margins, any number that you think would really shock you.
I mean, guidance, anything below 32 would be not 30. Like in 32 would probably be a pretty big shocker. Missing on anything would be a big shocker. What I'm really, really hopeful, though, is the Chinese market. We've heard a lot of reports in these past few months that their H20, which is a chip that is able to pass regulations, is doing really well in China. And I think most analysts are throwing away the Chinese market revenue. And if we do hear more about the H20 and the H20 actually doing pretty good, I think we can even see bigger numbers on their revenue. So I really am, I don't think it's a necessary market right now due to the appetite of the whole world in forms of AI. But obviously, it would be a huge bullish case if we did see some nice growth in the Chinese space.
Yeah, I think the international markets are going to be very interesting. One thing I talked about today on the Market Open was that I think a lot of international money is coming into NVIDIA. If you're a Chinese investor, Saudi investor, Japanese investor, Korean investor, a lot of your own countries have not done as well from a technological innovation perspective, or really from a GDP growth perspective. So the reason why this company is so important is because it determines everything for the broader market, and for hundreds of billions, obviously trillions of dollars of capital, given pretty much every sovereign wealth fund, public fund, hedge fund has to have exposure to NVIDIA. The net long exposure by institutions is 65%. So obviously a lot of big guys own the stock along with retail as well. Any thoughts on what you think will happen with AMD, Jose, or the other semis based on these earnings?
I think any bullish trend would be a nice bullish trend for all the other semiconductor stocks. I mean, if we know the appetite for AI is still pretty big, we know NVIDIA unfortunately can't fill that appetite by itself. So you're going to have companies like AMD that can kind of fill the other small appetite that they can probably crave. You have companies like Marvell and Broadcom who are expected to report in, I think Marvell reports tomorrow and Broadcom later next week. So I think you're going to see a nice bullish case on the overall semiconductor market. I don't know about Intel though. Intel is always a red flag, so I don't know how a good NVIDIA earnings would do with Intel.
Let me ask you this question. TSM guided, or they reported 44% sales growth in July, which signals what would happen for NVIDIA Q3 theoretically. And then SMCI, although their stock is tanked today, raised guidance by $3 billion. Those two have to be leading indicators to some extent for NVIDIA, I would imagine.
Yeah, definitely. I mean, you mentioned it really well with TSM, right? It's if they see a huge revenue growth for a month, it doesn't mean that NVIDIA is going to see that revenue growth right off the bat, because the process of manufacturing a chip takes time. Then once you manufacture the chip, that chip needs to go into a rack, then into a server, then it needs to get shipped off overseas to wherever it's going. So there's going to be a lag between TSM's revenue and NVIDIA's revenue. I don't know how long that lag is. Typically, I want to say it's around a quarter or two. So that kind of gives me that, again, those checks that, hey, look, we're seeing great appetite for NVIDIA, not just right now, but for the remaining of the year.
Right. And that guidance number is what everyone cares about. So if those checks are helping out in guidance, then that should hopefully be a bullish sign for Q3 guidance, which is what the street cares about. All right, folks. Thank you, everybody, for being here. We have 3 minutes left until we get these numbers. CrowdStrike up 3%. The street is eating up their numbers and basically saying, hey, cybersecurity TAM is real, and we're not too upset about what happened in July 19th. Salesforce nicely up 5%. You really want to see Salesforce do well, just given how important it is to the broader stock market. $250 billion market cap, a blue chip in the Dow Jones index, and basically at the level it was at the beginning of the year. So kind of getting back all of the gains that it lost after last earnings. S&P flat after hours, down about 0.5% on the day. NVIDIA slightly up. The numbers have not hit the terminal yet. No one knows it, but they're probably going to know in like 45 seconds. Bump, bump, bump is correct. And then hopefully we'll find out at 4:20. Jose, what are you feeling in these last 60 seconds as we are NVIDIA Q2 virgins? Because we might get fucked right now.
Yeah, I'm pretty calm right now, but it's just these been the longest 20 minutes I've experienced in a while. I was hoping earnings were out already and we were having some fun or crying, whichever we're gonna see in a few seconds, and we'll get those clips tomorrow. Yeah, I'm pretty excited to see what we're gonna see in the next minute or so.
Yep, and maybe it goes very well. I'm closing the poll right now. We have 80% on 5,000 votes said pump, and I'm looking at candles. The candles are thick. The candles are big. The candles are going up, and they are green, folks. I don't want to speak too soon because this always happens where you just never know until you really get the numbers. But the candles are green so far. We should be getting the numbers in just about 60 seconds, and then I will give you guys what we've got. I'm on the NVIDIA investor page right now. Usually it's uploaded immediately at their time. And I also have Twitter open to see if someone else has the numbers. If you have them, put them in the chat. But we are green. Okay, we're green by 2%. That's nice. We're green by 2%. Again, this could either go up or down based on as soon as the numbers really hit the street. But it is time. It is time. It is time. It is time. Uh-oh, I think someone... Oh, now it's red. Now it's red. Now we're down. Now we're down 1%. Now we're down. Now it's down. Still waiting for the exact numbers. Now it's back green. Now it's back. Now it's 2%. Now it's 2%. Now we're green. So that was a little head fake. A little head fake. We went right back green. I don't have the numbers yet. Jose, if you get it, just let me know if you have it either. But no numbers yet. I saw some people post numbers in the chat, but I didn't know if those numbers are real. So we're going to wait until we confirm. Now we're red. Now we're back red. Now we're down 2%. 420 officially. This is when the numbers should be out. We are red 2%. Volume of 370 million. Goodness gracious. Now we're green. Now we're green, folks. We were red. Now we're green. We're green slightly. You guys are saying beat. I don't have the numbers yet. Let me see.
Yeah, I haven't seen them yet.
I haven't seen them yet. Oh, we got it. EPS. We got it. We got about $1 billion beat. We got $1 billion beat. Here we go. EPS is 68 cents, 4 cents of a beat. Revenue, stock is down about 0.5%. 30 billion versus 28.7. $30 billion quarter for NVIDIA. The street wanted 28.7. We brought in 30. 30 billion. The stock really doesn't know what to do. It's like flat, it's green, it's flat, it's green. Right now it's slightly green, but that's the top line number, $30 billion, folks. We'll get the rest of the numbers, but that is your top line for NVIDIA.
So it seems like the whispers that you mentioned were pretty close on with the revenue and the earnings per share. Gross margins, what I'm looking at right now, is 75.7. So it was still pretty much in line with that 75%. So I saw those whispers were closer to 77, but we still within that 75. I think that's still really strong overall. Let me see if they posted the press release.
Yeah, I don't have the press release yet. It looks like, guys,
it is out though. I have it out right now. So
it looks like they're guiding, or data center revenue was 26.3 billion. So that was the beat on data center revenue. Full revenue was 30 billion. So they did 4 billion in everything else besides data center. And then EPS was 68 cents. So now we need guidance.
Yeah. So I just sent it to you. Guidance here. We have guidance of 32.5 billion plus or minus 2% for quarter 3. So
holy shit. Holy shit. Okay, so this is the page, right? This is wow. So
yeah, so guidance should be all the way at the bottom. I think page page 3.
Page 3. Okay, so that's the thing that matters the most. We're looking at
a little bit more down. They approved an additional 50 billion to our share buyback program. I don't know when they're buying back shares, but
there you go. So revenue is expected to be 32.5 billion. The street wanted 31.4. That's another beat on guidance.
Mm-hmm. The only thing I'm seeing here is just like gross margins. It does seem like we peaked in quarter 1 because quarter 2 we had that 75.5%, and here we see for quarter 3 they expect around that 75%. So not to worry here. I mean, 75% is still a crazy number, but I definitely could see a lot of media going out there and kind of pushing this negative trend that NVIDIA is going to be losing out on margin pain.
Okay, so what's your reaction to the stock price action down about 2%?
I mean, 120. I don't think I'm really gonna care much until if we hit those 100 values. We will hit 100 about August 5th, August 6th. 120. We were just trading this probably yesterday or 2 days ago. So in forms of this, not much pain.
Yeah, in terms of the stock, guys, I mean, look, it's down 4%. That definitely sucks.
Yeah, definitely 100%.
But the numbers are really good. Yeah. I mean, let's see the rest of the market real quick. CrowdStrike still up 3%. CrowdStrike and Salesforce not getting hit by NVIDIA numbers. AMD is down 1%. SMCI down another 3%. So now that's down 22% for the day. Palantir is down 1.55%. That's just below $30. Robinhood somehow up a little bit after hours. ELF is up a little bit after hours. The broader market, where's the S&P? The S&P index is down about 0.5%. So that's not the best. That's obviously because of NVIDIA. Now NVIDIA is down 7%. All right. So now you're getting a little bit of tanky. A little bit of tanky. So there you go. Now,
and I think we're going to feel this pain until probably the earnings call. And after the earnings call, that's when we're going to see probably the true direction. But I mean, again, right now I'm reading everything and nothing I would be personally worried about. I don't think they mentioned anything about delays. I'm going to continue to read, and if I see anything, I'll kind of talk some more. But for right now, I'm just reading here.
Okay, I'll let you read. Let's listen and get some updates on what's going on with NVIDIA.
68 cents adjusted versus the estimate of 64 cents. So a beat on its bottom line. Revenue at 30.04 billion, also higher than Wall Street consensus of 28.
They talk about Blackwell, so we can talk about that in a bit.
Jensen Q&A in the press release. Hopper demand remains strong, and the anticipation for Blackwell is incredible. He says NVIDIA achieved record revenues as global data centers are in full throttle to modernize the entire computing stack. He goes on to say that Blackwell samples are shipping to our partners and customers. Spectrum X Ethernet for AI and NVIDIA AI enterprise software are 2 new product categories achieving significant scale. Another data point here, NVIDIA announcing a $50 billion repurchase of shares. We are watching the stock here move fractionally higher in overtime. John, we'll get you the guidance in just a second.
All right, we'll wait that guide. Looks like it's a little.
Okay. Go ahead, Jose.
Yeah, so if I don't know if you want to pull it up. It's on page 2 where they talk about revenue. If Yep, right here. And then right there, we shipped customers samples of our Blackwell architecture in the second quarter. We executed a change to the Blackwell GPU maps. So it seems like there was some error in the original Blackwell, but the way I think this is so great. They're kind of shifting it around. Like, yes, we had to shift it up, but it improves our production yield. So they kind of pushed it into a positive note. Blackwell production ramp is still scheduled to begin in the fourth quarter and continue into fiscal 2026. In fourth quarter, we expect to ship several $billion in Blackwell revenue, and Hopper demand in shipments are expected to increase in the second half of fiscal 2025. So the appetite is still there. They're still going to make multi-billion dollars in Blackwell revenue at the end of this quarter, at the end of this year, and they still have a huge appetite for the H100 and the H200. So I don't know. I mean if
we're coming back a little bit right
Yeah.
here, right? So look, these numbers, and we're going to go through the numbers even more in depth in a second. Now it's down 1.6% after being down 7%. These numbers are phenomenal. Let no one steer you the wrong way. These numbers are absolutely phenomenal. The stock is the stock. You really, you can't control what the market thinks, but the numbers are just amazing. $50 billion buyback, raised guidance by $1 billion, beat by $1.4 billion on the, they even beat the whisper numbers by the street. This is what you needed to see from NVIDIA, and now the market has to decide what that means. But if the market keeps it at the same price, that PE is going to cut in half again, and it's just going to be a bit cheaper than it was today, given this growth is now getting priced in. So not too bad on the numbers. All right, guys, here's the actual press release. Thank you again, everybody, for being here today. We have the call in about 30 minutes, and we'll listen to what Jensen has to say. Record quarterly revenue of $30 billion, up 15% from Q1, up 122% from a year ago. Data center revenue, $26.3 billion, up 16% from Q1, up 154% from 1 year ago. Hopper demand remains strong, and the anticipation of Blackwell is incredible, said Jensen. NVIDIA achieved record revenues as global data centers are in full throttle to modernize the entire computing stack with accelerated computing and generative AI. Blackwell samples are shipping to our partners and customers. Spectrum X Ethernet for AI and NVIDIA AI Enterprise Software are two new product categories achieving significant scale, demonstrating that NVIDIA is a full stack and data center scale platform. Across the entire stack and ecosystem, we are helping frontier model makers make to consumer internet services and now enterprises. Generative AI will revolutionize every industry, basically talking about the deployment of LLMs. During the first half of 2025, NVIDIA returned $15.4 billion to shareholders in the form of repurchased shares and cash dividends. As the end of the second quarter, the company had $7.5 billion remaining under its share repurchase authorization. We approved an additional $50 billion today. Quick thoughts, Jose. $50 billion in buybacks, good, or should they be investing that in growth?
I mean, this company is making so much. Once you look at the number, they're making so much in cash flow from operations right now. They really don't know what to do with this money. So the best thing to do is continue to pay their engineers a great amount of money. So those engineers are happy working at NVIDIA headquarters 24/7 and making sure there's no competition in sight. So I think it's what they need to do because unless they have an acquisition planned, which I don't think any acquisition that NVIDIA tries to make would get blocked, in my opinion. But right now, with the amount of money that they're having coming in, they have to do something with that cash.
I would agree. The call is in 30 minutes, guys. In 30 minutes, we will listen to the call. So revenue, there you go. 30 billion versus 26 billion last quarter. Just insane. Up 4 billion, up 122% year over year. Gross margin 75. So that gross margin number is down by about 3%. That could be interpreted as bearish, but it's still up 5% or 5 points year over year.
Yeah, they mentioned that one of the main reasons gross margins was down was because the Blackwell originally had very low yields, and that's why they kind of made those changes. So maybe we might see these not bad margins, but 75, which is nowhere near bad for a hardware stock. I think this quarter we'll see them at 75. Next quarter we might see them at 75, but I think we might see an incremental on them coming into the early half of 2025.
I agree. That's fair. And that's a decent explanation for why the margins came down a little bit. Net income, they did 16.5 billion in profits. That's how you get your 68 cents EPS beat. 168% year over year increase in net income. Operating income up 174%. Operating expenses up 48%. You would imagine you have more expenses as you're servicing more clients. And then again, overall revenue is up 122%. These are pretty incredible numbers. So fiscal quarter For 2025, the third quarter, we have 32.5 billion. Again, they're probably, if they're guiding 32.5, you would imagine they come in at like 34, right? They have to have a beat next time. We're going to do the same rodeo again in 90 days. So you would imagine that's actually going to be closer to 34, just if they beat by 1 billion every time. 74% gross margins. GAAP and other GAAP non-income expenses expected to be income of approximately 350 million. That's fine. And then tax rates about 17%. Yeah, man, this is a good quarter. This is not a horrible quarter. Right now, the stock is down 5%. So that little recovery we saw is now getting hit and it's going back down. My personal reason why the stock is down, guys, is I think the numbers are phenomenal. The market was just expecting even better. And that's not NVIDIA's fault. I mean, you cannot blame a company growing 122% year over year, as Jose said, as a hardware company for, them being down 4%. The market is going to be the market. But at the end of the day, tomorrow, if the market opens at this price, that PE starts to go down, it looks even more attractive. And then the question becomes, is the macro in a good space to continue buying NVIDIA stock?
And one thing I didn't see there is they didn't share any thoughts on the Chinese market. Normally they talk about the Chinese space. I wonder, normally they would say, hey, look, it's even non-existent. But they didn't even mention that during this press release. Hopefully they talk a little bit about it during the earnings call. And I think investors are now a little bit curious about kind of those Blackwell changes. So we'll probably hear a little bit more about that during the Q&A session as well.
Yeah. For those who had puts at $100, if the stock continues to tank, those puts are going to print tomorrow. If you had calls at 130, if the stock does a rebound and gets above 130, those calls will print. Right now, the puts are winning. Right now, the puts are indeed winning. If you have 120 or below puts, you likely are up on them. But it's going to be a question of what happens on the call and what Jensen ends up saying to see how this plays out as well.
I think in my thoughts, NVIDIA, and like we've seen a lot of other companies, this is going to be a great time. It's going to be a great time for those that were option sellers, not option buyers, as they are playing a lot with this volatility, and they're definitely getting a nice premium on their sales.
Yeah, TJ and I, we have a public fund or a public little portfolio thing that we do every Friday on the market open. And we had some puts, I think 5 puts at 120, and we had covered calls at 140. So if the stock stays above 120, that's good for us. If stock stays below 140, that's good for us. But again, if you sold calls or sold puts, depending on your strike, probably a little better than buying those right now. All right, let's get some more coverage. We got the call in about 25 minutes.
A little bit above expectations. Nicole, what do you do with it here if you feel like you missed the big move?
The earnings beats are narrowing. I think that's exactly what I was watching over your shoulder as the market was trying to digest in the moment. When the earnings beats are narrowing, the street is less impressed on where we're headed next. And so I think until there's more clarity around movement outside of the hyperscalers, obviously adoption from finance, from healthcare, from the consumers, like we started to hear from Walmart. That's the next leg. And so I think the more we learn about Blackwell, what the stack's going to do, the demand for the stack, and these even higher margin products, right? This next gen, next wave, that's what moves us higher. And so I wouldn't say this isn't an entry point because we believe that we are long NVIDIA for 18 plus months here.
Along those lines, Paul, the fact that you had revenue up 152% year over year, but perhaps more significantly, revenue up 122% year over year, which represents another quarter of more than doubling. I mean, it tripled in the last quarter. So it does represent a deceleration in that rate of growth. And I wonder how much that is factoring into the stock as you see these rapid moves on your screen right now, but we're currently down 4%.
Yeah, so I mean, I think, we talked about, earlier before it released, they were going to have to exceed 30 billion just to, keep the market somewhat level here. But to your point, they've been increasing revenues so high. Revenues have more than quadrupled over the last 3 years. That's not going to happen again over the next 3 years. You'd have to have revenues of over 500 billion a year in order to keep that pace going. So the pace is going to slow. And so we always hear about, it's trading at a cheaper valuation now than it was a year ago, but the growth was so much stronger over the last year. That pace of growth is going to slow. I'm not saying that NVIDIA is a stock that you don't want to own, but you have to reset your expectations here. That what we've seen in the growth is going to slow down going forward. And, you know, I think there's other places that where investors can look in the market outside of just these Mag 7 type stocks. And you want to look for a broadening of the rally to areas that, you know, we're not talking about every day, that 75 analysts aren't covering, and that the Wall Street Journal and Bloomberg and CNBC aren't reporting stories about newly minted millionaires because of NVIDIA stock. There's going to be a new crop of stocks going forward, and that's where you want to look at as an investor.
Yeah.
Quick thoughts on that, Jose? Any argument on broadening out your expectations versus just...
I agree. I do think, right, we're not going to get those triple-digit revenues in the upcoming quarters now that we're getting... now that we saw huge growth in revenue. At the end of the day, right, we're supply constraint to one end. I mean, at the beginning, the lady kind of mentioned that these expectations and estimates are getting closer to what analysts are expecting. I don't think that's NVIDIA's fault. I think earlier on, a few quarters ago, or maybe even a year ago, analysts didn't really know much about the AI space. They didn't really know how to guide it. They didn't know, hey, what checks and balances should we look at to really understand what kind of earnings are coming in. So I think about a year ago, a lot of these analysts were, I wouldn't say uneducated, but it was because it was just such a new market. We didn't know exactly how to guide for upcoming quarters. I think what's happening now is analysts are getting smarter at understanding what to look at, where to look at it. And that's why those numbers are getting a lot closer. So I don't think that's necessarily a bearish case. I think the numbers that we're seeing right now, if we get this tone during the earnings call, if we see any sell-offs like we saw on August 5th, on August 6th, I personally think would be a buying opportunity.
3% down. It was down 7%. Now it's down 3%. So market's recovering a little bit. It will be really funny if on the earnings call, Jensen just talks his talk and market's like, yeah, why are we selling this off? So I guess we'll see how the market kind of interprets it in 20 minutes when we get the call. Let's get an update on their data center revenue, and then we'll keep going from there.
5%. It was down as much as 8 or 9. Of course, the story changes rapidly, and you can't count on anything directionally, certainly before the earnings call. Blackwell mentioned a couple times here in the release, but nothing necessarily about volume delivery, right?
That's exactly right. And, you know, data center is up 154%, but it's just not good enough. Investors could be reacting to what came out in the CFO note, which talked about Blackwell having a mask set change. I'm reading this right now, and they expect to begin shipping in the fourth quarter and continue into fiscal.
What's a mask set change?
Yeah, a mask set is essentially a metal change that goes in. You have to actually change the design and go into the foundry to increase yields. And anytime yield is discussed, John, it sets off panic, and that's exactly what I'm reading here. Even if it's, you know, I think on the call they have to talk about what kind of a shift could this mean. It'd be great for them to say no change. All of our customers are gonna fill this in, but yeah, they are talking about an issue with Blackwell that was rumored.
Okay, all the more reason to tune into the call here as we count down to that in a little over 30 minutes. Mike Santoli, I want to get your thoughts on what we're seeing as we do see these rapid ticks on the screen here in overtime in the stock. We had a guest on the show yesterday.
Now it's down 1.5%, so it's coming back a little bit. Palantir also back above 30, seeing a little bit more momentum. Now it's down 1.3. I'll let you guys know if we go green.
And he said, you know, looking at the options action, what was priced in was a 9 to 10% move in either direction for NVIDIA.
Yeah, all day today, about 11% move was priced into based on how the at-the-money options were trading. That doesn't necessarily mean it's perfectly predictive, but it shows you what people were willing to bet on. And the results, as everybody's been saying, this sort of deceleration, certainly still amazing growth, but relative to expectations, just not really vaulting them by as much of a margin. The smallest earnings beat in any quarter in the last year and a half for NVIDIA up till now was like 9%. This beat by less than 5% on adjusted EPS. So still good. The revenue guide, $800 million higher than the street was at for the coming quarter. All of that's in the positive direction, but you know the market kind of got there, and I think it's almost going to be somewhat comforting or maybe soothing to investors.
How could you hate that graph?
chasing this incredibly fast-moving story. This company added $100 billion in annual revenue, like over the course of 2 years. It added like a target over 2 years. It was impossible to keep up with that pace. So we'll see where it settles out, from here. It's not a crazy valuation, but it's one that's ramped so fast. $50 billion buyback is nice. Guess what? The stock traded literally $50 billion worth of stock today alone. So it's not exactly something that's going to soak up a ton of supply.
To that point, there is a lot of money in NVIDIA stock moving in overtime right now. This is a $3 trillion market cap stock. It was down 8-9% at one point, higher, lower. Now it's down about 3% in overtime, but the call is still to come. Thank you, Paul Hickey, Nicole Webb, Patrick Moorhead.
All right, we got the stock recovering a little bit, man. We got the stock recovering a little bit right here at down 2%. It was down 1.5. I don't know if this is going to be a day where the bulls get to say, we got up to the green by 5 or 10%. But what's funny, Jose, is if we stay flat, all that volatility, that like implied volatility, up or down $300 billion in market cap, it was nothing. Nothing.
Yeah. I mean, I think NVIDIA is going to, I don't know. I think we're going to stay within a nice range. It's not going to be a crazy earnings now that we saw the numbers, unless Jensen really says something crazy during the call.
Yeah, at this point, I think it's really just a question of what he's going to say during the call. What do you guys think? Let's read some comments from the chat. I know we have a lot of people here. Thank you all for being here today. We've got the call in less than 20 minutes. What are you guys thinking? Good, bad? How are you feeling? Too much priced in? Markets being stupid? How are you thinking of it? By the way, let's check Bitcoin and Bitcoin's reaction to NVIDIA. Bitcoin was down 6% yesterday. Bitcoin basically flat, down about 0.5%. Nothing too crazy for Bitcoin. I remember, I'm old enough to remember when NVIDIA pumped because of crypto. And now NVIDIA pumps because of everything but crypto.
Because of that, yeah. That was not too many years ago.
Yeah, that's when I was just like really starting to understand like what even is NVIDIA. And I was like, oh, well, data centers, GPUs, crypto, okay. But obviously much bigger use cases now besides crypto. We got someone saying it's still 9 p.m. at the party. I would tend to agree. It still feels like 9 p.m. at the party. And so one of the things the analyst said, Jose, what's your take on this? The rate of growth is deaccelerating because obviously if they keep growing 400%, they would do 500 billion in revenue or something. Does that matter or is that normal in the stock market? The rate of growth tends to slow down, but if you stay above a certain threshold, like 30, 40%, that's still amazing.
Yeah, I mean, you have big companies like Microsoft, right? Apple, they're not growing at these double, triple digits. So, I mean, if we get these numbers where NVIDIA this year, these upcoming years are doing over $160, $150 billion in revenue, then I think it kind of goes with the valuation that has been giving of $3 trillion, right? It's then with those high gross margins, I don't think investors should be expecting huge revenue growth. But I don't think this is going to be a lagger. I think we're going to continue to see double-digit growth in the upcoming quarters because of the huge appetite for AI at the moment.
Yeah, I would tend to agree. Nick Piercy says CrowdStrike cut guidance. Why is it up? Because again, and this is something we've been talking about for a while. They cut guidance by 100 million. Like the CrowdStrike story, for those that are just tuning in, CrowdStrike had revenue guidance pressures. CrowdStrike now 3.5% of 30 million a quarter for the next couple quarters. Let's just assume it's annualized at 4 quarters. That's $120 million of pain because of this Y2K fiasco they had. That's nothing. I mean, that companies spend $100 million on legal fees over a couple of years, right? Like if people thought they would be losing billions of dollars. I mean, if what they're saying is right, to 120 million, are you kidding me? And you're still growing top line at 30%. If you're a CrowdStrike investor that's like deep in CrowdStrike, you've got to be one of the happiest people in the world right now, because that is just not what most of the bears expected CrowdStrike to be able to put out. So CrowdStrike right here at 273. Salesforce up 4%. Again, Salesforce also crushed their numbers. Nice EPS beat and revenue beat, free cash flow beat as well. So you got Salesforce right here at 269, up 4% on the day. S&P 500 now recovering a little bit. It was down 0.5%. Now it's down 0.25%. NVIDIA still down 3%. It was down 7%. So you have a little bit of a rebound. AMD down 1%. SMCI probably still down 2%. SMCI now down 2.7%. Berkshire Hathaway is flat. And the NASDAQ, I'd imagine, is probably down 1%. The NASDAQ is down 0.5%. So kind of a honestly boring reaction.
Yeah. And another thing, I was just looking at their earnings call. Their gaming segment, which is obviously not a story anymore for NVIDIA right now. It was up 9% quarter over quarter and 16% year over year. I mean, this again can be good for companies like AMD, which are still very dependent on the consumer space. So it can tell you that, hey, look, consumers are spending money on laptops, on desktops, and GPUs that cost a lot of money.
Yeah, so here we go. This is data center, 26.2 billion versus 10 billion last year. Gaming, they did 2.8 billion. That's an increase. Professional visualization, 454 million. Auto, 346 million. OEM at 88 million, and that's how you get $30 billion of revenue in this quarter right now. Jose, what do you think is the catalyst, the real world catalyst adoption of AI that NVIDIA is going to benefit from? Do you think it's FSD? Do you think it's humanoid robotics? Like, where is NVIDIA's real growth over the next decade coming from AI when it comes to real world applications?
For me, the three are going to be robotics, and any type. I think robotics and FSD would kind of fall within the same box. So I think that would be a huge market. And the second for me, and I think would be the biggest, is the drug discovery or drug engineering. I think the ability to be able to personalize medicine for things like cancer or these kind of crazy diseases that we have out right now, where they're more something that you have to personalize to be able to not cure, but make better. I think that's where AI is going to be a crazy move. So healthcare and robotics, automotive are the two that I believe are going to be the biggest winners.
Yeah, I would tend to agree. Healthcare, robotics, and FSD, I think also is going to be very big. 13 minutes, guys. 13 minutes. Let's get some more analysis on what we have from NVIDIA. But in 13 minutes, we will be hearing what at least the street has to say. And also, I think we had HP earnings, so we'll get an update on that as well.
Short of estimate. Results are out. Julia Borson has those numbers. Julia. HP's fiscal third quarter earnings falling 3 cents short of estimates, while revenues of $13.52 billion beat estimates on the strength of PC sales. HP guiding to fiscal fourth quarter earnings in a range of 89 to 99 cents, that midpoint just a penny short of the analyst consensus. The company also increasing its share repurchase authorization to $10 billion. HP CEO Enrique Lores telling me, quote, "We continue to navigate dynamic and competitive markets," saying the print market recovery was slower than we were expecting, and we are taking actions to compensate for that, saying when we think about the fourth quarter, we expect it to be a strong quarter. Back over to you guys.
All right, Julia, thank you. Shares of NVIDIA, meanwhile, still lower by about 4.5% after the company reported a beat on the top and bottom lines, announced a $50 billion buyback. For more, let's bring in CFRA's senior equity analyst, Angelo Zeno. He's got a buy rating, $139 price target on the stock. Angelo, it looks like there is indeed some adjustment that NVIDIA is doing in the production process for the Blackwell platform. How much more do we need to know about that?
Well, I think we kind of want to know, a little bit more in terms of kind of, what the ramp is going to look like in terms of Blackwell here over the next couple of quarters. Clearly it's been delayed here. I think really what investors want to know, and when you kind of look at the numbers here, right? I mean, you look at the actual July quarter numbers, they were pretty good, beat the data center number by a little bit north of $1 billion or so, grew 15% sequentially. When you kind of look at the guide here for the October quarter, it implies a sequential increase of less than 10%. It's kind of the lowest sequential increase we've seen since essentially kind of the Microsoft OpenAI announcement of 10 billion plus back in early 2023. So, obviously the beat and raises are going to be more difficult to come by. Partly, we think, at least going into the October quarter, is this delayed Blackwell ramp. I do think you've got the potential now to potentially see a reacceleration once that Blackwell ramp actually takes place here. But we kind of need to know a little bit more details in kind of what the trajectory of that looks like here.
Do you think that question, Jose, is the question most people will focus on, Blackwell?
I think so. I mean, I think everybody's worried about the Blackwell because it's the next generation. But right now, I think everything looks good from that end. And we're still seeing that appetite from the H100 and the H200. And from what we saw here in the press release, it seems like the Blackwell issue is behind us. So it's going to be more like, hey, why didn't you tell us earlier or something like that? But I think the Blackwell issues are behind us, and it's not going to be anything that should be headwinds in the future.
Is there any question that do you think the company is like not expecting? Like, is there any question you think from analysts that you don't think they have the best answer for?
where management doesn't have the best answer for, or the analysts don't have the right question for?
Oh, that's a great way to frame it. Both.
Oh damn! Now I don't know. For management, no. I think management is on top of their game. They any
like, there's not
you
any
throw-
question you think that could catch them off guard. If you were an analyst, do you think you could ask them something that would like freak them out a little bit?
I don't think so. I think maybe want to learn more about the technical aspects of the Blackwell issue, but I think that's just too into the technicals that it really wouldn't worry much the investors. And in forms of the analysts, I think a lot of analysts are just going to ask some weird ass questions, and it annoys me that I just want to know about the Chinese market, a little final wording on the Blackwell delays, and just appetite for the H100 and the H200, and then they can end the call and we can see them again in 3 months.
Dude, if I was an analyst, I would do the market a favor, and I would be like, Mr. Huang, can you please just tell us why AI matters, and say it like we're a third grader? Like, give me like a ChatGPT. This is how I'm prompting you. Give me a real way to understand AI, because all my analyst friends want to tank Microsoft every time they don't show exactly the amount of revenue they want to see. Why should we go long on AI? Because I honestly think the market needs to hear it again. And maybe they stop freaking out after, there's too much CapEx spend, even though they want there to be more CapEx spend.
But Angelo, is this kind of like NVIDIA is the U.S. women's team in the 4x400 relay? They were so far ahead that if they run one leg a little slower than they could, does it really affect the medal?
I mean, listen, I really don't think it does, right? So, at the end of the day, I guess you can make that comparison. I think NVIDIA right now is perfectly okay with where they sit here. The numbers in our view, again, were pretty good. The guidance, I think, was okay as well. I think if you're an investor right now, you kind of have to look ahead into calendar 2025. Blackwell will launch. It will ramp. We think it's going to be an enormous cycle because of the fact that it is going to be more of this platform-based ramp. So if you are selling your shares here after hours, we would be careful for that, because this is going to be a free cash flow monster. Even if the year-over-year growth rates are clearly going to decelerate, that is pretty much well reflected in the valuations here, we think.
And along those lines, I mean, we've seen more than 33 million shares change hands just here in overtime since this report was released. I want to dig a little deeper into this, because they also said in the release that Hopper demand remains strong. So it raises the question for me, how many folks are going to continue to focus on Hopper, even if you have a delay in Blackwell, or is that going to be spending? Like, how to think about that mix?
Yeah, I mean, listen, I think we'll get a little bit more detail here on the call as well. But the H200 just recently ramped. It's not like it's been out for over a year or so. It just kind of ramped here over the last couple of months. So we're still early in kind of the H200 ramp, and we do think there is significant demand. We do think kind of demand continues to outstrip supply. And you've kind of alluded, or you've kind of heard a number of these hyperscale providers here over the last couple of months kind of allude to the fact that they're going to remain aggressive, buyers here. So as far as the H100, H200 is concerned here, at least over the next couple of months, we do think kind of, these cloud companies are essentially going to kind of, invest aggressively on kind of these Hopper GPUs, because essentially that's the only thing out in the market right now until Blackwell ramps.
Do you agree with that, Jose? I would imagine you do.
Yeah, I mean, at the end of the day, we're still in. Jensen mentioned Blackwell is the revolutionary product for them. That's the crazy product. Hopper was amazing, but Blackwell is going to be the revolutionary product that he believes that in a few years from now, everybody's going to say, what made this difference in AI? And people are going to point at the Blackwell product. So I think Blackwell, we still have that coming out in 2025. We're still in early innings here for the products. Then the Rubin after that. I mean, I don't know why anyone would be selling right now with these numbers. Obviously, short-term investor, you might have different financial opportunities. Everybody has their own personal financial life. But as a long-term investor, the best is still to come for NVIDIA with Blackwell, with their Ethernet solutions for both AI and traditional Ethernet. They have the software solutions that they're building. And then we're still going into the market where 100,000 GPU clusters is still just single thing right now. We're going to hear a lot of data centers build 100,000 GPU clusters. Eventually, we're going to hear them build 1 million GPU clusters. So AI is here for a market. So for me, nothing to worry about, and still a long-term game here for NVIDIA.
We got the call in 4 minutes, folks, so we'll be live in 4 minutes. Jose, let me ask you this question because I saw it in the chat as well, and I was also wondering this. Who is buying these chips besides the hyperscalers? Because there's got to be other people, right, that are still buying these chips from NVIDIA?
So right now, main customers are the cloud service providers because at the end of the day, right, they're using these clouding solutions. And in every business, the reason they're using it is because, one, they're doing their frontier models, like OpenAI is doing their GPTs, whatever. Google's doing their Geminis, even though they're using TPUs. But in theory, these are using it for frontier model training. But then these AI chips are also used for the clouding market. So there's a lot of startup companies all over the world building AI solutions, and they themselves don't buy their own AI chip because it's too expensive. So they're picking up that demand and going to these hyperscalers. So that you would say is like an offset customer or a twice removed
they're
customer.
not literally buying the chips, but if they're buying compute from Microsoft, Microsoft has to buy more chips, basically.
Yes, and then you have the enterprise players, which seems to be kind of a new market right now. These are like your actual businesses that don't want to hold anything on the cloud. They want to have it all on-prem. They are starting to be one of the good customers here for NVIDIA. And then outside of that, you're also going to have governments and government entities buying these types of chips for their own national issues as well.
Yeah.
But at the end of the day, I believe the biggest customer is going to be the cloud service providers. But that's because, like I mentioned, you have those twice removed customers that come from the clouding market.
Right. No, I would agree. One perspective, guys, we got 2 minutes into the calls as well from a stock market. Just like macro view is that NVIDIA not going up by 10% and staying in the range that it's basically been in, which is, I would say 100 to 120. Let's call it 110 to 120. Right now, the stock's at 121. So let's call it 110 to 120. I don't think that's the worst thing in the world either, because if anything, that just like allows the market to chill out a bit. The stock's up more than 150%. S&P's up almost 20%. Broader market's at a massive rally. We've got unemployment data coming out. We've got an election coming up that's going to have volatility. Like, even if you have the stock pumped to 140, the idea that it would hold 140, given all the turmoil we're about to go through over the next couple of weeks, September in general is historically volatile. For the past 4 years, we've had a negative 4% month in September on the S&P. You would imagine that 140 might not even be possible to maintain. So I actually think for those that like really wanted a 10% pump, including me, that would have been awesome to see. If we don't see a 10% down, I think that's almost just as good, because the market naturally gets to price in NVIDIA that is cheaper than it is today. And, you know, that's easier for people to end up buying over the next couple of weeks as well.
Yeah, I agree. I mean, I think a nice steady growth in stock price, not every quarter we see a 10% growth. It's fine on my books. It makes me less nervous for earnings when I know the stock hasn't run up X amount percentage in the last 3 months, because obviously that volatility can swing both ways.
Yeah, I would 100% agree. And now we just got to see on this call, does Jensen say anything that is necessarily going to change anything from the initial stock price reaction? Again, if you're just joining, first of all, thank you to the 8,000 people that are on my channel and for the 6,000 people that are on Jose's channel. Really, really means a lot. 14,000 people in total. Big win for independent content creators doing our own thing. So really appreciate you guys. Means the absolute world to us from the bottom of our hearts. And thank you all for being here today. If you are just joining, 50 billion share buyback, revenue beat of 30 billion versus 26 billion, EPS beat of 4 cents. Revenue guidance of $32.5 freaking billion. Now Jensen's just going to have to answer some questions, and if he answers it the right way, maybe we see the stock take up a little bit more. The first 20 minutes of the call is going to be boring. They're just going to be reading the numbers, so get ready to just kind of sit back. But after about 25 minutes, we'll get questions, and we'll see what Jensen has to say.
Good afternoon. My name is Abby, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's second quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, simply press the star key followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 a second time. Thank you. And Mr. Stuart Stecker, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the second quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I would like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2025. The content of today's call is NVIDIA's property. It cannot be reproduced or transcribed without prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of risks, significant risks, and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 28, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight an upcoming event for the financial community. We will be attending the Goldman Sachs Communacopia and Technology Conference on September 11th in San Francisco, where Jensen will participate in a keynote fireside chat. Our earnings call to discuss the results of our third quarter of fiscal 2025 is scheduled for Wednesday, November 20th, 2024. With that, let me turn the call over to Colette.
Thanks, Stuart. Q2 was another record quarter. Revenue of $30 billion was up 15% sequentially and up 122% year on year, and well above our outlook of $28 billion. Starting with data center. Data center revenue of $26.3 billion was a record, up 16% sequentially and up 154% year on year, driven by strong demand for NVIDIA Hopper GPU computing and our networking platforms. Compute revenue grew more than 2.5x. Networking revenue grew more than 2x from the last year. Cloud service providers represented roughly 45% of our data center revenue, and more than 50% stemmed from the consumer, internet, and enterprise companies. Customers continue to accelerate their Hopper architecture purchases while gearing up to adopt Blackwell. Key workloads driving our data center growth include generative AI, model training and inferencing, video, image, and text data, pre- and post-processing with CUDA and AI workloads, synthetic data generation, AI-powered recommender systems, SQL and vector database processing as well. Next-generation models will require 10 to 20 times more compute to train with significantly more data. The trend is expected to continue. Over the trailing 4 quarters, we estimate that inference drove more than 40% of our data center revenue. CSPs, consumer internet companies, and enterprises benefit from the incredible throughput and efficiency of NVIDIA's inference platform. Demand for NVIDIA is coming from frontier model makers, consumer internet services, and tens of thousands of companies and startups building generative AI applications for consumers, advertising, education, enterprise and healthcare, and robotics. Developers desire NVIDIA's rich ecosystem and availability in every cloud. CSPs appreciate the broad adoption of NVIDIA and are growing their NVIDIA capacity given the high demand. NVIDIA H200 platform began ramping in Q2, shipping to large CSPs, consumer internet, and enterprise companies. The NVIDIA H200 builds upon the strength of our Hopper architecture and offering over 40% more memory bandwidth compared to the H100. Our data center revenue in China grew sequentially in Q2 and is a significant contributor to our data center revenue. As a percentage of total data center revenue, it remains below levels seen prior to the imposition of export controls. We continue to expect the China market to be very competitive going forward. The latest round of MLPerf inference benchmarks highlighted NVIDIA's inference leadership with both NVIDIA Hopper and Blackwell platforms combining to win gold medals on all tests. At Computex, NVIDIA, with the top computer manufacturers, unveiled an array of Blackwell architecture-powered systems and NVIDIA networking for building AI factories and data centers. With the NVIDIA MGX modular reference architecture, our OEMs and ODM partners are building more than 100 Blackwell-based systems designed quickly and cost-effectively. The NVIDIA Blackwell platform brings together multiple GPU, CPU, DPU, NVLink switch, and the networking chips, systems, and NVIDIA CUDA software to power the next generation of AI across the cases, industries, and countries. The NVIDIA GB200 NVL72 system with the 5th generation NVLink enables all 72 GPUs to act as a single GPU and deliver up to 30 times faster inference for LLMs workloads and unlocking the ability to run trillion parameter models in real time. Hopper demand is strong and Blackwell is widely sampling. We executed a change to the Blackwell GPU mass to improve production yields. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal year 26. In Q4, we expect to ship several $billion in Blackwell revenue. Hopper shipments are expected to increase in the second half of fiscal 2025. Hopper supply and availability have improved. Demand for Blackwell platforms is well above supply, and we expect this to continue into next year. Networking revenue increased 16% sequentially. Our Ethernet for AI revenue, which includes our Spectrum-X end-to-end Ethernet platform, doubled sequentially with hundreds of customers adopting our Ethernet offerings. Spectrum-X has broad market support from OEM and ODM partners and is being adopted by CSPs, GPU cloud providers, and enterprise, including xAI, to connect the largest GPU compute cluster in the world.
There's a shout out to Elon.
Spectrum-X supercharges Ethernet for AI processing and delivers 1.6x the performance of traditional Ethernet. We plan to launch new Spectrum-X products every year to support demand for scaling compute clusters from tens of thousands of GPUs today to millions of GPUs in the near future. Spectrum-X is well on track to begin a multi-billion-dollar product line within a year. Our sovereign AI opportunities continue to expand as countries recognize AI expertise and infrastructure at national imperatives for their society and industries. Japan's National Institute of Advanced Industrial Science and Technology is building its AI bridging cloud infrastructure 3.0 supercomputer with NVIDIA. We believe sovereign AI revenue will reach low double-digit billions this year. The enterprise AI wave has started. Enterprises also drove sequential revenue growth in the quarter. We are working with most of the Fortune 100 companies on AI initiatives across industries and geographies. A range of applications are fueling our growth, including AI-powered chatbots, generative AI copilots, and agents to build new monetizable business applications and enhance employee productivity. Amdocs is using NVIDIA generative AI for their smart agent, transforming the customer experience and reducing customer service costs by 30%. ServiceNow is using NVIDIA for its Now Assist offering, the fastest growing new product in the company's history. SAP is using NVIDIA to build Joule copilots. Cohesity is using NVIDIA to build their generative AI agent and lower generative AI development costs. Snowflake serves over 3 billion queries a day for over 10,000 enterprise customers, is working with NVIDIA to build copilots. And lastly, Wistron is using NVIDIA AI Omniverse to reduce end-to-end cycle times for their factories by 50%. Automotive was a key growth driver for the quarter, as every automaker developing autonomous vehicle technology is using NVIDIA in their data centers. Automotive will drive multi-billion dollars in revenue across on-prem and cloud consumption, and will grow as next generation AV models require significantly more compute. Healthcare is also on its way to being a multi-billion-dollar business as AI revolutionizes medical imaging, surgical robots, patient care, electronic health record processing, and drug discovery. During the quarter, we announced a new NVIDIA AI Foundry service to supercharge generative AI for the world's enterprises with Meta's Llama 3.1 collection of models. This marks a watershed moment for enterprise AI. Companies, for the first time, can leverage the capabilities of an open source frontier level model to develop customized AI applications to encode their institutional knowledge into an AI flywheel to automate and accelerate their business. Accenture is the first to adopt the new service to build custom Llama 3.1 models for both its own use and to assist clients seeking to deploy generative AI applications. NVIDIA NIMs accelerate and simplify model deployment. Companies across healthcare, energy, financial services, retail, transportation, and telecommunications are adopting NIMs, including Aramco, Lowe's, and Uber. AT&T realized 70% cost savings and 8 times latency reduction after moving into NIMs for generative AI, call transcription, and classification. Over 150 partners are embedding NIMs across every layer of the AI ecosystem. We announced NIM Agent Blueprints, a catalog of customizable reference applications that include a full suite of software for building and deploying enterprise generative AI applications. With NIM Agent Blueprints, enterprises can refine their AI applications over time, creating a data-driven AI flywheel. The first NIM Agent Blueprints include workloads for customer service, computer-aided drug discovery, and enterprise retrieval augmented generation. Our system integrators, technology solution providers, and system builders are bringing NVIDIA NIM Agent Blueprints to enterprises. NVIDIA NIM and NIM Agent Blueprints are available through the NVIDIA AI Enterprise Software Platform, which has great momentum. We expect our software, SaaS, and support revenue to approach a $2 billion annual run rate exiting this year, with NVIDIA AI Enterprise notably contributing to growth. Moving to gaming and AI PCs. Gaming revenue of $2.88 billion increased 9% sequentially and 16% year on year. We saw sequential growth in console, notebook, and desktop revenue, and demand is strong and growing, and channel inventory remains healthy. Every PC with RTX is an AI PC. RTX PCs can deliver up to 1,300 AI TOPS, and there are now over 200 RTX AI laptops designed from leading PC manufacturers. With 600 AI-powered applications and games and an installed base of 100 million devices, RTX is set to revolutionize consumer experiences with generative AI. NVIDIA ACE, a suite of generative AI technologies, is available for RTX AI PCs. Mega Break is the first game to use NVIDIA ACE, including our small language model, Minitron 4B, optimized on device inference. The NVIDIA gaming ecosystem continues to grow. Recently added RTX and DLSS titles include Indiana Jones and the Great Circle, Dune Awakening, and Dragon Age, the Veilguard. The GeForce Now library continues to expand with total catalog size of over 2,000 titles, the most content of any cloud gaming service. Moving to Pro Visualization. Revenue of $454 million was up 6% sequentially and 20% year on year. Demand is being driven by AI and graphic use cases, including model fine-tuning and Omniverse-related workloads. Automotive and manufacturing were among the key industry verticals driving growth this quarter. Companies are racing to digitalize workflows to drive efficiency across their operations. The world's largest electronics manufacturer, Foxconn, is using NVIDIA Omniverse to power digital twins of the physical plants that produce NVIDIA Blackwell systems. And several large global enterprises, including Mercedes-Benz, signed multi-year contracts for NVIDIA Omniverse Cloud to build industrial digital twins of factories. We announced new NVIDIA USD NIMs and connectors to open Omniverse to new industries and enable developers to incorporate generative AI copilots and agents into USD workflows, accelerating their ability to build highly accurate virtual worlds. WPP is implementing USD NIM microservices in its generative AI-enabled content creation pipelines for customers, such as the Coca-Cola Company. Moving to automotive and robotics. Revenue was $346 million, up 5% sequentially and up 37% year on year. Year on year growth was driven by the new customer ramps in self-driving platforms and increased demand for AI cockpit solutions. At the Computer Vision and Pattern Recognition Conference, NVIDIA won the Autonomous Grand Challenge in the end-to-end driving at scale category, outperforming more than 400 entries worldwide. Boston Dynamics, BYD Electronics, Figure, Intrinsic, Siemens, Skilled AI, and Teradyne Robotics are using the NVIDIA Isaac Robotics platform for autonomous robot arms, humanoids, and mobile robots. Now moving to the rest of the P&L. GAAP gross margins were 75.1% and non-GAAP gross margins were 75.7%. Down sequentially due to a higher mix of new products within data center and inventory provisions for low-yielding Blackwell material. Sequentially, GAAP and non-GAAP operating expenses were up 12%, primarily reflecting higher compensation-related costs. Cash flow from operations was $14.5 billion. In Q2, we utilized cash of $7.4 billion towards shareholder returns in the form of share repurchases and cash dividends, reflecting the increase in dividend per share. Our board of directors recently approved a $50 billion share repurchase authorization to add to our remaining $7.5 billion of authorization at the end of Q2. Let me turn the outlook for the third quarter. Total revenue is expected to be $32.5 billion, plus or minus 2%. Our third quarter revenue outlook incorporates continued growth of our Hopper architecture and sampling of our Blackwell products. We expect Blackwell production ramp in Q4. GAAP and non-GAAP gross margins are expected to be 74.4% and 75% respectively, plus or minus 50 basis points. As our data center mix continues to shift to new products, we expect this trend to continue into the fourth quarter of fiscal 2025. For the full year, we expect gross margins to be in the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $4.3 billion and $3.0 billion, respectively. Full-year operating expenses are expected to grow in the mid to upper 40% range as we work on developing our next generation of products. GAAP and non-GAAP other income and expenses are expected to be about $350 million, including gains and losses from non-affiliated investments and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. We are now going to open the call for questions.
All right, here we go.
Please help us and poll for questions.
This is it, baby.
Thank you. And at this time, I would like to remind everyone, in order to ask a question, press star and then the number 1 on your telephone keypad. We will pause for just a moment to compile the Q&A roster. And as a reminder, we ask that you please limit yourself to 1 question.
This is time for Jensen to answer some questions.
And your first question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. Jensen, you mentioned in the prepared comments that there's a change in the Blackwell GPU mask. I'm curious, are there any other incremental changes in back-end packaging or anything else? And I think related, you suggested that you could ship several $1 billion of Blackwell in Q4 despite a change in the design. Is it because all these issues will be solved by then? Just help us size what is the overall impact of any changes in Blackwell timing, what that means to your kind of revenue profile, and how are customers reacting to it?
Yeah, thanks, Vivek. The change to the mask is complete. There were no functional changes necessary. And so we're sampling functional samples of Blackwell, Grace Blackwell, in a variety of system configurations as we speak. There are something like 100 different types of Blackwell-based systems that are built that were shown at Computex. And we're enabling our ecosystem to start sampling those. The functionality of Blackwell is as it is, and we expect to start production in Q4.
And your next question comes from the line of Toshiya Hari with Goldman Sachs. Your line is open.
Hi, thank you so much for taking the question. Jensen, I had a relatively longer term question. As you may know, there's a pretty heated debate in the market on your customers and customers' return on investment, and what that means for the sustainability of CapEx going forward. Internally at NVIDIA, like what are you guys watching? What's on your dashboard as you try to gauge customer return and how that impacts CapEx? And then a quick follow-up maybe for Colette. I think your sovereign AI number for the full year went up maybe a couple billion. What's driving the improved outlook, and how should we think about fiscal 26? Thank you.
Big question.
Thanks, Toshiya. First of all, when I said ship production in Q4, I mean shipping out. I don't mean starting to ship, but I don't mean starting production, but shipping out. On the longer term question, let's take a step back. And you've heard me say that we're going through 2 simultaneous platform transitions at the same time. The first one is transitioning from accelerated computing from general purpose computing to accelerated computing. And the reason for that is because CPU scaling has been known to be slowing for some time. And it is slow to a crawl. And yet the amount of computing demand continues to grow quite significantly. You could maybe even estimate it to be doubling every single year. And so if we don't have a new approach, computing inflation would be driving up the cost for every company, and it would be driving up the energy consumption of data centers around the world. In fact, you're seeing that. And so the answer is accelerated computing. We know that accelerated computing, of course, speeds up applications. It also enables you to do computing at a much larger scale, for example, scientific simulations or database processing. But what that translates directly to is lower cost and lower energy consumed. And in fact, this week, there's a blog that came out that talked about a whole bunch of new libraries that we offer.
And that's really the core of the first platform transition, going from general purpose computing to accelerated computing. And it's not unusual to see someone save 90% of their computing cost. And the reason for that is, of course, you just sped up an application 50x. You would expect the computing cost to decline quite significantly. The second was enabled by accelerated computing because we drove down the cost of training large language models or training deep learning so incredibly that it is now possible to have gigantic scale models, multi-trillion parameter models, and pre-train it on just about the world's knowledge corpus, and let the model go figure out how to understand human language representation and how to codify knowledge into its neural networks and how to learn reasoning. And so which caused the generative AI revolution. Now, generative AI, taking a step back about why it is that we went so deeply into it, is because it's not just a feature, it's not just a capability, it's a fundamental new way of doing software. Instead of human engineered algorithms, we now have data. We tell the AI, we tell the model, we tell the computer what are the expected answers, what are our previous observations, and then for it to figure out what the algorithm is, what's the function. It learns a universal, AI is a bit of a universal function approximator, and it learns the function. And so you could learn the function of almost anything, and anything that you have that's predictable, anything that has structure, anything that that you have previous examples of. And so now here we are with generative AI. It's a fundamental new form of computer science. It's affecting how every layer of computing is done, from CPU to GPU, from human engineered algorithms to machine learned algorithms, and the type of applications you could now develop and produce is fundamentally remarkable. And there are several things that are happening in generative AI. So the first thing that's happening is the frontier models are growing in quite substantial scale. And we're still all seeing the benefits of scaling. And whenever you double the size of a model, you also have to more than double the size of the data set to go train it. And so the amount of flops necessary in order to create that model goes up quadratically. And so it's not unusual, it's not unexpected to see that the next generation models could take 10, 20, 40 times more compute than last generation. So we have to continue to drive the generational performance up quite significantly so we can drive down the energy consumed and drive down the cost necessary to do it. So the first one is there are larger frontier models trained on more modalities, and surprisingly, there are more frontier model makers than last year. And so you have more on more on more. That's one of the dynamics going on in generative AI. The second is, although it's below the tip of the iceberg, what we see are ChatGPT, image generators. We see coding. We use generative AI for coding quite extensively here at NVIDIA now. We, of course, have a lot of digital designers and things like that. But those are kind of the tip of the iceberg. What's below the iceberg are the largest computing systems in the world today, which are, and you've heard me talk about this in the past, which are recommender systems moving from CPUs. It's now moving from CPUs to generative AI. So recommender systems, ad generation, custom ad generation, targeting ads at very large scale and quite hyper targeting, search and user generated content. These are all very large scale applications have now evolved to generative AI. Of course, the number of generative AI startups is generating tens of billions of dollars of cloud renting opportunities for our cloud partners, and sovereign AI. Countries that are now realizing that Their data is their natural and national resource, and they have to use AI, build their own AI infrastructure so that they could have their own digital intelligence. Enterprise AI, as Colette mentioned earlier, is starting, and you might have seen our announcement that the world's leading IT companies are joining us to take the NVIDIA AI Enterprise platform to the world's enterprises. The companies that we're talking to, so many of them are just so incredibly excited to drive more productivity out of their company. And then general robotics, the big transformation last year, as we are able to now learn physical AI from watching video and human demonstration and synthetic data generation, from reinforcement learning from systems like Omniverse. We're now able to work with just about every robotics companies now to start building general robotics. And so you can see that there's just so many different directions that generative AI is going. And so we're actually seeing the momentum of generative AI accelerating.
And Toshiya, to answer your question regarding sovereign AI and our goals in terms of growth, in terms of revenue, it certainly is a unique and growing opportunity, something that surfaced with generative AI and the desires of countries around the world to have their own generative AI that would be able to incorporate their own language, incorporate their own culture, incorporate their own data in that country. So more and more excitement around these models and what they can be specific for those countries. So yes, we are seeing some growth opportunity in front of us.
And your next question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. Jensen, in the press release, you talked about Blackwell anticipation being incredible, but it seems like Hopper demand is also really strong. I mean, you're guiding for a very strong quarter without Blackwell in October. So, how long do you see sort of coexisting strong demand for both? And can you talk about the transition to Blackwell? Do you see people intermixing clusters? Do you think most of the Blackwell activity is new clusters? Just some sense of what that transition looks like.
Yeah, thanks, Joe. The demand for Hopper is really strong. And it's true, the demand for Blackwell is incredible. There's a couple of reasons for that. The first reason is if you just look at the world's cloud service providers and the amount of GPU capacity they have available, it's basically none. And the reason for that is because they're either being deployed internally for accelerating their own workloads, data processing, for example. Data processing, we hardly ever talk about it because it's mundane. It's not very cool because it doesn't generate a picture or generate words. But almost every single company in the world processes data in the background, and NVIDIA's GPUs are the only accelerators on the planet that process and accelerate data, SQL data, Pandas data science toolkits like Pandas, and the new one, Polars. These are the most popular data processing platforms in the world. And aside from CPUs, which, as I've mentioned before, really running out of steam, NVIDIA's accelerated computing is really the only way to get boosting performance out of that. And so that's number one, is the number one use case long before generative AI came along is the migration of applications one after another to accelerated computing. The second is, of course, the rentals. They're renting capacity to model makers, are renting it to startup companies. And a generative AI company spends the vast majority of their invested capital into infrastructure so that they could use an AI to help them create products. And so these companies need it now. They just simply can't afford, you just raise money, they want you to put it to use now. You have processing that you have to do. You can't do it next year. You got to do it today. And so there's a fair. That's one reason. The second reason for Hopper demand right now is because of the race to the next plateau. The first person to the next plateau gets to be, gets to introduce a revolutionary level of AI. The second person who gets there is incrementally, better or about the same. And so the ability to systematically and consistently race to the next plateau and be the first one there is how you establish leadership. NVIDIA is constantly doing that, and we show that to the world in the GPUs we make and the AI factories that we make, the networking systems that we make, the SoCs we create. I mean, we want to set the pace. We want to be consistently the world's best, and that's the reason why we drive ourselves so hard. Of course, we also want to see our dreams come true, and all of the capabilities that we imagine in the future and the benefits that we can bring to society. We want to see all that come true, and so these model makers are the same. They're of course they want to be the world's best. They want to be the world's first, and although Blackwell will start shipping out in billions of dollars at the end of this year, the standing up of the capacity is still probably weeks and a month or so away. And so between now and then is a lot of generative AI market dynamic. And so everybody is just really in a hurry. It's either operational reasons that they need it. They need accelerated computing. They don't want to build any more general purpose computing infrastructure. And even Hopper, of course, H200 is state of the art. Hopper, if you have a choice between building CPU infrastructure right now for business or Hopper infrastructure for business right now, that decision is relatively clear. And so I think people are just clamoring to transition the $1 trillion of established installed infrastructure to a modern infrastructure, and Hopper is state of the art.
And your next question comes from the line of Matt Ramsey with TD Cowen. Your line is open.
Thank you very much. Good afternoon, everybody. Jensen, I wanted to kind of circle back to an earlier question about the debate that investors are having about the ROI on all of this CapEx. And hopefully this question and the distinction will make some sense. But what I'm having discussions about is with like the percentage of folks that you see that are spending all of this money and looking to sort of push the frontier towards AGI convergence and, as you just said, a new plateau in capability, and they're going to spend regardless to get to that level of capability because it opens up so many doors for the industry and for their company, versus customers that are really, really focused today on CapEx versus ROI. I don't know if that distinction makes sense. I'm just trying to get a sense of how you're seeing the priorities of people that are putting the dollars in the ground on this new technology and what their priorities are and their time frames are for that investment. Thanks.
Thanks, Matt. The people who are investing in NVIDIA infrastructure are getting returns on it right away. It's the best ROI computing infrastructure investment you can make today. And so one way to think through it, probably the easiest way to think through it is just go back to first principles. You have $1 trillion worth of general purpose computing infrastructure, and the question is, do you want to build more of that or not? And for every $1 billion worth of general purpose CPU-based infrastructure that you stand up, you probably rent it for less than $1 billion. And so, because it's commoditized, there's already $1 trillion on the ground. What's the point of getting more? And so the people who are clamoring to get this infrastructure, one, when they build out Hopper-based infrastructure and soon Blackwell-based infrastructure, they start saving money. That's tremendous return on investment. And the reason why they start saving money is because data processing saves money. Data processing is probably just a giant part of it already. And so recommender systems save money, so on and so forth. Okay. And so you start saving money. The second thing is everything you stand up are going to get rented because so many companies are being founded to create generative AI, and so your capacity gets rented right away, and the return on investment of that is really good. And then the third reason is your own business. You want to either create the next frontier yourself, or your own internet services benefit from a next generation ad system, or a next generation recommender system, or a next generation search system. So for your own services, for your own stores, for your own user generated content, social media platforms, for your own services, generative AI is also a fast ROI. And so there's a lot of ways you could think through it, but at the core, it's because it is the best computing infrastructure you could put in the ground today. The world of general purpose computing is shifting to accelerated computing. The world of human engineered software is moving to generative AI software. If you were to build infrastructure to modernize your cloud and your data centers, build it with accelerated computing NVIDIA. That's the best way to do it.
And your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Thanks a lot. I had a question on the shape of the revenue growth, both near and longer term. I know, Colette, you did increase OpEx for the year, and if I look at the increase in your purchase commitments and your supply obligations, that's also quite bullish. On the other hand, there's some school of thought that not that many customers really seem ready for liquid cooling, and I do recognize that some of these racks can be air cooled. But Jensen, is that something to consider, sort of on the shape of how Blackwell is going to ramp? And then I guess when you look beyond next year, which is obviously going to be a great year, and you look into 26, do you worry about any other gating factors like, say, the power supply chain, or at some point models start to get smaller? I'm just wondering if you can speak to that. Thanks.
I'm going to work backwards. I really appreciate the question, Tim. So remember, the world is moving from general purpose computing to accelerated computing, and the world builds about $1 trillion worth of data centers. $1 trillion worth of data centers in a few years will be all accelerated computing. In the past, no GPUs are in data centers, just CPUs. In the future, every single data center will have GPUs. And the reason for that is very clear, because we need to accelerate workloads so that we can continue to be sustainable, continue to drive down the cost of computing, so that when we do more computing, we don't experience computing inflation. Second, we need GPUs for a new computing model called generative AI that we can all acknowledge is going to be quite transformative to the future of computing. And so I think working backwards, the way to think about that is the next $1 trillion of the world's infrastructure will clearly be different than the last trillion, and it'll be vastly accelerated. With respect to the shape of our ramp, we offer multiple configurations of Blackwell. Blackwell comes in either a Blackwell Classic, if you will, that uses the HGX form factor that we pioneered with Volta, and I think it was Volta. And so we've been shipping the HGX form factor for some time. It is air cooled. The Grace Blackwell is liquid cooled. However, the number of data centers that want to go liquid cooled is quite significant. And the reason for that is because we can, in a liquid cooled data center, in any data center, power limited data center, whatever size data center you choose, you could install and deploy anywhere from 3 to 5 times the AI throughput compared to the past. And so liquid cooling is cheaper. Liquid cooling, our TCO is better, and liquid cooling allows you to have the benefit of this capability we call NVLink, which allows us to expand it to 72 Grace Blackwell packages, which has essentially 144 GPUs. And so imagine 144 GPUs connected in NVLink, and that we're increasingly showing you the benefits of that. And the next click is obviously very low latency, very high throughput, large language model inference. And the large NVLink domain is going to be a game changer for that. And so I think people are very comfortable deploying both. And so almost every CSP we're working with are deploying some of both. And so I'm pretty confident that we'll ramp it up just fine. Your second question out of the third is that looking forward, next year is going to be a great year. We expect to grow our data center business quite significantly next year. Blackwell is going to be a complete game changer for the industry, and Blackwell is going to carry into the following year. And as I mentioned earlier, working backwards from first principles, remember that computing is going through two platform transitions at the same time, and that's just really, really important to keep your head on, your mind focused on, which is general purpose computing is shifting to accelerated computing, and human engineered software is going to transition to generative AI or artificial intelligence learned software. Okay.
Pretty good answer.
And your next question comes from the line of Stacy Raskin with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. I have two short questions for Colette. The first, several $1 billion of Blackwell revenue in Q4. Is that additive? You said you expected Hopper demand to strengthen in the second half. Does that mean Hopper strengthens Q3 to Q4 as well, on top of Blackwell adding several $1 billion? And the second question on gross margins, if I have mid-70s for the year, depending on where I want to draw that, if I have 75 for the year, I'd be something like 71 to 72 for Q4, somewhere in that range. Is that the kind of exit rate for gross margins that you're expecting? And how should we think about the drivers of gross margin evolution into next year as Blackwell ramps? And I mean, hopefully, I guess the yields and the inventory reserves and everything come up.
Yes, so Stacy, let's first take your question that you had about Hopper and Blackwell. So we believe our Hopper will continue to grow into the second half. We have many new products for Hopper, our existing products for Hopper, that we believe will start continuing to ramp in the next quarters, including our Q3 and those new products moving to Q4. So let's say Hopper therefore versus H1 is a growth opportunity for that. Additionally, we have the Blackwell on top of that, and the Blackwell starting of ramping in Q4. So hope that helps you on those two pieces. Your second piece is in terms of on our gross margin. We provided gross margin for our Q3. We provided our gross margin on a non-GAAP at about 75. We'll work with all the different transitions that we're going through, but we do believe we can do that 75 in Q3. We provided that we're still on track for the full year, also in the mid-70s or approximately the 75. So we're going to see some slight difference possibly in Q4, again, with our transitions and the different cost structures that we have on our new product introductions. However, I'm not in the same number that you are there. We don't have exactly guidance, but I do believe you're lower than where we are.
And your next question comes from the line of Ben Reitzes with Melius. Your line is open.
Yeah, hey, thanks a lot for the question, Jensen and Colette. I wanted to ask about the geographies. There was the 10Q that came out, and the United States was down sequentially, while several Asian geographies were up a lot sequentially. Just wondering what the dynamics are there. And obviously China did very well. You mentioned it in your remarks. What are the puts and takes? And then I just wanted to clarify from Stacy's question if that means the sequential overall revenue growth rates for the company accelerate in the fourth quarter, given all those favorable revenue dynamics. Thanks.
Let me talk about a bit in terms of our disclosure in terms of the 10Q, a required disclosure in a choice of geographies. Very challenging sometimes to create that right disclosure as we have to come up with one key pieces in terms of who we sell to and or specifically who we invoice to. And so what you're seeing in terms of there is who we invoice. That's not necessarily where the product will eventually be and where it may even travel to the end customer. These are just moving to our OEMs, our ODMs, and our system integrators for the most part across our product portfolio. So what you're seeing there is sometimes just a swift shift in terms of who they are using to complete their full configuration before those things are going into the data center, going into notebooks and those pieces of it. And that shift happens from time to time. But yes, our China number there, our invoicing to China, keep in mind that is incorporating both gaming, also data center, also automotive in those numbers that we have. Going back to your statement in regarding gross margin and also what we're seeing in terms of what we're looking at for Hopper and Blackwell in terms of revenue. Hopper will continue to grow in the second half. Will continue to grow from what we are currently seeing. During determining that exact mix in each Q3 and Q4, we don't have here. We are not here to guide yet in terms of Q4. But we do see right now the demand expectations. We do see the visibility that will be a growth opportunity in Q4. On top of that, we will have our Blackwell architecture.
And your next question comes from the line of CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. You've embarked on a remarkable annual product cadence with challenges only likely becoming more and more given rising complexity in a reticle limit advanced package world. So curious, if you take a step back, how does this backdrop alter your thinking around potentially greater vertical integration, supply chain partnerships, and then thinking through consequential impact to your margin profile? Thank you.
Yeah, thanks. Let's see. I think the answer to your first question is that the reason why our velocity is so high is simultaneously because the complexity of the model is growing, and we want to continue to drive its cost down. It's growing, so we want to continue to increase its scale. And we believe that by continuing to scale the AI models, that will reach a level of extraordinary usefulness, and that it would open up, realize the next industrial revolution. We believe it, and so we're going to drive ourselves really hard to continue to go up that scale. We have the ability, fairly uniquely, to integrate, to design an AI factory because we have all the parts. It's not possible to come up with a new AI factory every year unless you have all the parts. And so we have next year, we're going to ship a lot more CPUs than we've ever had in the history of our company. More GPUs, of course, but also NVLink switches, CX DPUs, ConnectX CPU for East and West, Bluefield DPUs for North and South, and data and storage processing, to InfiniBand for supercomputing centers, to Ethernet, which is a brand new product for us, which is well on its way to becoming a multi-billion-dollar business to bring AI to Ethernet. And so the fact that we could build, we have access to all of this. We have one architectural stack, as you know. It allows us to introduce new capabilities to the market, as we complete it. Otherwise, what happens is you ship these parts, you go find customers to sell it to, and then somebody's got to build up an AI factory. And the AI factory's got a mountain of software. And so it's not about who integrates it. We love the fact that our supply chain is disintegrated in the sense that we could service, Quanta, Foxconn, HP, Dell, Lenovo, Supermicro. We used to be able to service ZT. They were recently purchased, and and so on and so forth. And so the number of ecosystem partners that we have, Gigabyte, ASUS, the number of ecosystem partners that we have, that allows them to take our architecture, which all works, but integrated in a bespoke way into all of the world's cloud service providers, enterprise data centers. The scale and reach necessary from our ODMs and our integrator supply chain is vast and gigantic because the world is huge. And so that part we don't want to do, and we're not good at doing. And but we know how to design the AI infrastructure, provide it the way that customers would like it, and lets the ecosystem integrate it. Well, yeah. So, anyways, that's the reason why.
And your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yes, thanks for taking the question. I wanted to go back into the Blackwell product cycle. One of the questions that we tend to get asked is how you see the rack scale system mix dynamic as you think about leveraging NVLink, you think about GB, NVL72, and how that go-to-market, dynamic looks, as far as the Blackwell product cycle. I guess, put succinctly, how do you see that mix of rack scale systems as we start to think about the Blackwell cycle playing out?
Yeah, Aaron, thanks. The Blackwell rack system, it's designed and architected as a rack, but it's sold in disaggregated system components. We don't sell the whole rack. And the reason for that is because everybody's rack's a little different, surprisingly. Some of them are OCP standards, some of them are not, some of them are enterprise. And the power limits for everybody could be a little different. Choice of CDUs, the choice of power bus bars, the configuration and integration into people's data centers, all different. And so the way we designed it, we architected the whole rack. The software is going to work perfectly across the whole rack. And then we provide the system components. Like, for example, the CPU and GPU compute board is then integrated into an MGX. It's a modular system architecture. MGX is completely ingenious. And we have MGX ODMs and integrators and OEMs all over the planet. And so just about any configuration you would like, where you would like that 3,000-pound rack to be delivered, it's got to be close to it has to be integrated and assembled close to the data center because it's fairly heavy. And so everything from the supply chain, from the moment that we ship the GPU, CPUs, the switches, the NICs, from that point forward, the integration is done quite close to the location of the CSPs and the locations of the data centers. And so you can imagine how many data centers in the world there are and how many logistics hubs we've scaled out to with our ODM partners. And so I think that because we show it as one rack, and because it's always rendered that way and shown that way, we might have left the impression that we're doing the integration. Our customers hate that we do integration. The supply chain hates us doing integration. They want to do the integration. That's their value added. There's a final design in, if you will. It's not quite as simple as shimmy into a data center, but that design fit in is really complicated. And so the design fit in, the installation, the bring up, the repair and replace, that entire cycle is done all over the world. And we have a sprawling network of ODM and OEM partners that does this incredibly well. So integration is not the reason why we're doing racks. It's the anti-reason of doing it. The way we don't want to be an integrator, we want to be a technology provider.
And I will now turn the call back over to Jensen Huang for closing remarks.
Thank you. Let me make a couple of comments that I made earlier again. The data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong, and the anticipation for Blackwell is incredible. Let me highlight the top 5 things. The top 5 things of our company. Accelerated computing has reached a tipping point. CPU scaling slows. Developers must accelerate everything possible. Accelerated computing starts with CUDA-X libraries. New libraries open new markets for NVIDIA. We released many new libraries, including CUDA Accelerated Polars, Pandas, and Spark, the leading data science and data processing libraries. cuVS for vector databases. This is incredibly hot right now. Ariel and Shiona for 5G wireless base station. A whole world of data centers that we can go into now. Parabricks for gene sequencing, and AlphaFold 2 for protein structure prediction is now CUDA accelerated. We are at the beginning of our journey to modernize $1 trillion worth of data centers from general purpose computing to accelerated computing. That's number 1. Number 2, Blackwell is a step function leap over Hopper. Blackwell is an AI infrastructure platform, not just a GPU. Also happens to be the name of our GPU, but it's an AI infrastructure platform. As we reveal more of Blackwell and sample systems to our partners and customers, the extent of Blackwell's leap becomes clear. The Blackwell vision took nearly 5 years and 7 one-of-a-kind chips to realize. The Grace CPU, the Blackwell dual GPU in a CoWoS package, ConnectX DPU for east-west traffic, Bluefield DPU for north-south and storage traffic, NVLink switch for all-to-all GPU communications, and Quantum and Spectrum X for both InfiniBand and Ethernet can support the massive burst traffic of AI. Blackwell AI factories are building-sized computers. NVIDIA designed and optimized the Blackwell platform full stack, end-to-end, from chips, systems, networking, even structured cables, power and cooling, and mountains of software to make it fast for customers to build AI factories. These are very capital-intensive infrastructures. Customers want to deploy it as soon as they get their hands on the equipment and deliver the best performance and TCO. Blackwell provides 3 to 5 times more AI throughput in a power-limited data center than Hopper. The third is NVLink. This is a very big deal. With its all-to-all GPU switch is game-changing. The Blackwell system lets us connect 144 GPUs in 72 GB200 packages into one NVLink domain, with an aggregate NVLink bandwidth of 259 terabytes per second in one rack. Just put that in perspective, that's about 10 times higher than Hopper. 259 terabytes per second kind of makes sense because you need to boost the training of multi-trillion parameter models on trillions of tokens. And so that natural amount of data needs to be moved around from GPU to GPU. For inference, NVLink is vital for low latency, high throughput, large language model token generation. We now have 3 networking platforms: NVLink for GPU scale up, Quantum InfiniBand for supercomputing and dedicated AI factories, and Spectrum X for AI on Ethernet. NVIDIA's networking footprint is much bigger than before. Generative AI momentum is accelerating. Generative AI frontier model makers are racing to scale to the next AI plateau to increase model safety and IQ. We're also scaling to understand more modalities, from text, images, and video to 3D, physics, chemistry, and biology. Chatbots, coding AIs, and image generators are growing fast, but it's just the tip of the iceberg. Internet services are deploying generative AI for large-scale recommenders, ad targeting, and search systems. AI startups are consuming tens of billions of dollars yearly of CSP's cloud capacity, and countries are recognizing the importance of AI and investing in sovereign AI infrastructure. And NVIDIA AI and NVIDIA Omniverse is opening up the next era of AI, general robotics. And now the enterprise AI wave has started, and we're poised to help companies transform their businesses. The NVIDIA AI Enterprise Platform consists of NeMo, NIMs, NIM Agent Blueprints, and AI Foundry that our ecosystem partners, the world-leading IT companies, use to help companies customize AI models and build bespoke AI applications. Enterprises can then deploy on NVIDIA AI Enterprise Runtime. And at $4,500 per GPU per year, NVIDIA AI Enterprise is an exceptional value for deploying AI anywhere. And for NVIDIA's software TAM can be significant as the CUDA-compatible GPU installed base grows from millions to tens of millions. And as Colette mentioned, NVIDIA software will exit the year at a $2 billion run rate. Thank you all for joining us today.
And ladies and gentlemen, this concludes today's call, and we thank you for your participation.
All right, there we go. NVIDIA earnings, one of the most important days in the summer, is now done. The stock is down about 6.29%, actually recovering a little bit. You see some green candles, bottomed at $115. So the buyer stepped in at 115. Now stock's at 117, but we are still down 6%. Jose, your reaction to what Jensen said on the call?
I mean, Jensen at the end finally got some energy and spoke with a little bit more heart there. But overall, still, it was, I want to say, a non-crazy quarter. We had great earnings. We had great revenue. We had great guidance. Jensen also mentioned that for the upcoming year, data center revenue is going to be up strongly compared to this year. Their Blackwell platform is expected to ship out in Q4 with several $billion just this quarter. So, I mean, as a long-term investor, there's nothing from this earnings that would worry me. Obviously, in the short term, we see this price action that sucks. But for me, as a long-term investor, there was nothing here that worried me. And I definitely want to learn from the chat, either on your side or my side here, of what they saw that was bearish between this point of earnings. Obviously, maybe it didn't meet expectations. I don't see why not. But overall, everything looked pretty strong.
Yeah, so let's put in the chat, either on my side or Jose's side. And again, thank you everybody for joining. What did you think was bearish besides the stock falling, like in the actual quarter, the call, the numbers itself? And what did you think was bullish? What I got from the call, and we'll go a little bit deeper on some of the questions that Jensen answered, but the biggest question that I cared about, and I've been saying this for the past couple of weeks, this is like the only question I cared about, is can he calm down the street around AI monetization or ROI from the hyperscalers, given the hyperscalers are the majority of NVIDIA's customers? And he said a bunch of things. He got asked this question twice. This was actually the second question he got asked, and I think he gave a pretty good response. Quick TLDR, he said, look, generative AI is real. Accelerated computing is real. It's just more efficient ways of doing what we're doing today. Frontier models are growing rapidly in scale. If you double the size of a model, you need to double the amount to compute to train it. More model makers are becoming prevalent. It's not just ChatGPT. Now we have image models, video models, etc. Robotics are becoming a physical manifestation of AI, basically hinting, hey, if you believe in Optimus, you better believe in NVIDIA, because Optimus doesn't become real without NVIDIA. And essentially highlighted how many different ways AI is going to be implemented. He also said, in response to another question about AI, that you're going to save a lot of money when you spend on CapEx based on all the use cases you can deploy against that CapEx for the hyperscalers. So, Jose, what are your thoughts on that question? I thought he did a pretty good job, but I don't know if the street really felt he gave enough of an answer to justify why they shouldn't freak out if Microsoft spends $20 billion on CapEx.
The only thing I would say, obviously I'm an NVIDIA bull, but I didn't like how one of these things was just, you're going to save money. You're going to save money. You're going to save money. It kind of seemed like a little weak answer. But I don't think what else can you say when in reality, you're just going to save money, because if you're going from a CPU optimized server to now an accelerated server, you're obviously going to save money in a variety of things. So, I mean, I don't know if I was expecting a little bit more from him to say that but you definitely brought up some great points. I just thought he probably could have made that point a little bit stronger, because maybe investors, and I'm already seeing it on Twitter or X, some people are taking that as a bearish case where he probably could have shared a little bit more thoughts and kind of maybe ease a lot of the fear that is happening here with AI CapEx.
Yeah, I would agree 100%. Doug's comment right here. Jensen's trying to pivot the story from AI to general accelerated computing. Maybe not everyone needs AI, but everyone needs accelerated computing. So it's all good to keep buying these super expensive GPUs. I think that's a fair point that he made, and obviously trying to make that narrative a lot more important. And their numbers are backing up that narrative to an extent with the beat on revenue and the beat on the guidance. Someone says right here, revenue beat was only 3.8%. This is a trend. It beat 12%, then 7.5%, then 6.05%, and now 3.8%. I agree. So the rate of growth on the beats is deaccelerating, and this was the smallest percentage beat that we've had in the past couple quarters. So, Jose, do you think that if the beats get smaller, the street just gets less likely to end up buying the stock on these earnings reports?
I think we talked about it before the earnings call happened, where some lady on CNBC was kind of talking about that. And I mentioned that I just think the street is getting smarter on how to project these numbers. About a year ago, they didn't know what to look at with forms of supply chain. They didn't know who were the bottlenecks, who were having the issues to really project these numbers. And that's why NVIDIA could really kind of outbeat those numbers. Now, in forms of the street, they know exactly what to look for. So that's why their guidance is getting a lot closer to estimates. And I think that's going to continue the trend. Regardless, NVIDIA is still being bullish and still beating these. And I believe that's going to be the case. I'm going to guess tomorrow we're going to see a nice amount of upgrades on NVIDIA, because obviously if they beat on guidance or estimates, it means that there were a lot of analysts that were under that average. So we're probably going to see a nice amount of growth or upside in upgrades from analysts tomorrow.
So you think even though the stock is down right now, the analysts, they're going to have to raise their price targets?
Yeah, I mean, obviously, if you had an average of analyst price and NVIDIA beat it, then there's a nice amount of analysts that were under those numbers. So in theory, they should go up tomorrow in upgrades. And another quick thing, Douglas, I think, mentioned the accelerated computing. Accelerated computing is something that NVIDIA has mentioned for numerous times. So it's not like he's trying to stay away from the AI. He's always mentioned there's two technological shifts happening right now. First is the accelerated computing, which is kind of tearing down all these inefficient CPU servers, which have a huge amount of $1 trillion capex, I believe he mentions, and pushing a GPU with accelerated computing. And the second is generative AI. And I think this is something that he continues to say on a quarterly basis.
Makes sense. I would tend to agree. So in my chat, I said, where does NVIDIA go tomorrow? 32% of you guys said 120 to 125. 31% actually said 130. And about 12% of you said below 100. On Jose's chat, we have 35% of you guys saying 130 and 19% of you guys saying 100. So still the majority of you guys feel the stock will get eaten up, or at least this dip will get eaten up. Again, we saw 115. That was that bottom right here. Where buyers finally stepped in, but we're at 116.95. We have low liquidity in the after hours. Tomorrow when the market opens, we are going to see if this is a bloodbath or if people step in and they immediately buy the dip. What's actually funny about this, just in terms of the price action, I'll give a couple of my thoughts here, is number one, like this is the same price it was at a week ago. Like this is, it's not some dramatic decline that we've seen, and that's because the stock has appreciated after August 5th. Number two, I actually think it's not crazy that the stock is down 5 or 6% or flat. If it was up 10% and we got a wick all the way to 145 and maybe we held it for a day, I don't know if we hold that going into the jobs report, going into the election cycle. Like that's a lot to ask for a stock that's already up almost 175%. So I think the price action, as much as it sucks and as much as I would love to have seen it go up, I think it's kind of healthy. And if the stock will get cheaper based on the price staying the same or coming down, it just means there's a better opportunity for longs to get excited if you believe in the NVIDIA thesis. Jose, dip buying or holding still based on this earnings?
Based on this earnings, if it drops below 110, I think I might pick up some shares. But the shares that I would pick up, they would be more for, I think I've talked about it in the past. I don't know if I've talked about it in my channel, but these would be that I would use for income solutions. So I would buy shares where I would use to sell calls on for me to build up income. But it's like, it's not shares that I'm planning on holding the long term. My long-term position, I have no changes to that whatsoever.
Yeah, I would agree. If you sold calls on this earnings, you won. If you bought calls, unfortunately, it's tough right now. Maybe something happens tomorrow, but if you had like calls expiring on Friday, unless we have a nice reversal in the stock, is going to be a little tough. So right now, down 6.4%. Option sellers seem to have had a victory on this earnings report. Palantir down 1.8%, 29.79. QQQ down 1%. SMCI down 6% after hours as NVIDIA falls.
Ouch.
S&P, yeah, that one now down about 25% for the day. S&P down about 0.5%. Bitcoin at 59,000. AMD 3.6% down. Reddit down about 1.34%. Affirm, this is the most random shit ever. Buy now, pay later is up 15%, even though generative AI is down 6%. But Affirm, nice earnings, they're up 15%. We'll talk more about that tomorrow in the market open as we dive into those numbers. Okta down 10%. Don't know why that happened, but again, we'll go through that tomorrow. CrowdStrike down 4%. Again, if you're a CrowdStrike investor, it was, this thing's going to collapse 30, 40%. The fact that it's only down 4%, maybe not the worst thing. Salesforce maintaining its momentum, up 3.5%. Robinhood down about 1.32%. And then NVIDIA right here down 6.3% on the day.
This was fun.
Any last thoughts? Any final things you heard on that earnings call that you thought are really important to say something about?
No, I mean, I think, again, I might sound like a broken record here, but long-term thesis still intact. Blackwell still hasn't been released, and Blackwell is going to be a huge revenue product for them. Still huge demand for AI solutions. The Jensen, I believe, mentioned that the compute capacity needed to train these AI models continues to grow at a rapid pace. So overall, we're still seeing a nice bullish trend. I am going to take a closer look, and just a quick plug here, probably release a video in my channel later tonight. I'm really looking more at the Q&A sessions. I like to reread the transcript before making a video, so to see if I might find any questions that really popped out and that I think we should cover again.
Yeah, so Jose's got to get out of here because he's got to get ready to make his recap video. Let me just put his video or his channel on my chat. So if you are following my channel but not following Jose, this is his YouTube channel and his Twitter. Thank you, Jose, for joining me on this stream, and thank you for allowing me to join your stream on your channel. Thank you, everybody, for being here. It means the world to us. Hope you guys enjoyed. We'll have a lot more coverage coming up in the next couple of days, and we'll see you guys tomorrow. Thank you, everybody. Have a good one. Good night.